Good evening, friends. The last class, we started with the chapter Standard Costing, in which we completed material and then labor variances. Today we will complete variable and fixed overhead variances. Please stop talking. We will complete the variable and fixed overhead variances. If we have time, we can do a reconciliation problem, reconciling standard cost and actual cost, where material, labor, variable and fixed overhead variances, all the four will be calculated and the reconciliation will be done. If we have time, we can complete that. One of our past final RTP question problem, a very good sum. Once we complete that, next class we'll move on to the sales variance and the main reconciliation problems. Please settle down, don't talk, please. We saw that standard costing system helps in control process for the management. Companies prepare budget at the beginning of the period and actually at the end of the period, actuals are achieved. The target is compared with the actual, variances found out and reported. The variance, profit variance can be analyzed into sales variance and cost variance. Cost variance can be further analyzed into material, labor, variable and then fixed overhead variances. If the variances increases the profit, they are favorable. If they decrease the profit, they are adverse. First, we started discussing about the cost variance. We saw that there are three types of cost. Stop talking, please. There are three types of cost: budgeted cost, standard cost and actual cost. Cost planned is budgeted cost, cost allowed is standard cost and cost incurred is actual cost. See, both of us cannot talk together. I already said mutually exclusive event. Okay, when you toss a coin, either head or tail. Head and tail cannot come mutually exclusive event, right or not? Yeah, correct? No. Same way. Either I can talk or you can talk. Both cannot talk together. Understand, it's a mutually exclusive event. Understand that? Yeah. Can I proceed? No. If you talk, I will stop because sensitive. Yeah. Because I cannot talk freely. If there is some noise or some disturbance in the class, I want you to settle down immediately. You take 20 to 25 minutes to settle down. You ask me to leave half an hour early, okay? In between I have only small time. At that time you are sleeping, okay? Then how can I take the portions here? Okay, now. You understand my situation now? Now, please. Settle down quickly, please. So we saw there are three types of cost: budgeted cost, standard cost, actual cost. Budgeted cost is budgeted cost for budgeted output. Standard cost also is budgeted cost, but for actual output. Per unit is budget, but the output is actual. We call as standard cost. Otherwise, it is a flexible budgeted cost. Actual cost is cost that is actually incurred. Cost variance doesn't reconcile budgeted cost and actual cost. It reconciles standard cost and actual cost. Question arises, then what happens to the difference between budgeted cost and standard cost? I said we will be discussing later during the sales variance discussion, something called a sales volume variance. We will take care of that. Can I proceed? Next. We saw first the material cost variances. Two types of problems: single raw material input and mix of raw materials. How many steps are there? Two steps. First step is computation table. Second step is variance calculation. Computation table, single raw material, how many columns? 3 columns. Name the 3 columns: SQ into SP, AQ into AP, AQ into SP. The word SQ means standard quantity for actual output. Simply material allowed for my output. It is found out using what ratio? Input-output ratio. SP means standard price, AP means actual price, AQ means actual quantity. Material cost variance 1 minus 2 branches into material price 3 minus 2, material usage 1 minus 3. If you have multiple raw material mixed in producing the final product, then we will be having fourth column RAQ into SP. RAQ is revised actual quantity. One can even call as revised standard quantity. That revised actual quantity is actual quantity in standard mix. The usage variance is further branched into material mix variance, material yield variance. Mix is 4 minus 3, yield is 1 minus 4. All this variance, we saw the logic or we saw the reason for these variances and who is also accountable. In between we saw a variance called as material joint variance, which is the overlapping of usage as well as the price variance. Then we discuss about labor variances. Nothing great. Same as metal variance, single type of labor producing the products or multiple type of labors. In case of single type of labor, tell me how many steps are there? 2 steps. Step 1 is computation table. Name the columns here. SH into SR, AH into AR, AH into SR. SH means standard hours for actual output. SR means standard rate. AH means actual hours. AR means actual rate. Such standard hours can also be called as time allowed. In IPCC labor chapter we call it as time allowed. Actual hours can be taken as time taken. Then the variances are labor cost variance 1 minus 2 branches into labor rate variance, labor efficiency variance. Rate is 3 minus 2, efficiency is 1 minus 3. When you have more than one type of labor, skilled, unskilled, men, women, etc., we are having the fourth column RAH into SR. RAH means actual hours in standard mix. Then the rate labor efficiency is further branched into labor gang variance and labor productivity variance. Gang variance is 4 minus 3, productivity variance is 1 minus 4. We also did the last sum in the previous class regarding the idle time. When you have idle time, the efficiency variance is further classified into revised efficiency and idle time variance. Idle time variance is idle time into standard rate. Revised efficiency, like efficiency, is 1 minus 3, where the column 3 is actual hours worked into standard rate. Up to this we completed in the previous class. Respond, yes or no? No. I just want to have a small notes dictated for the idle time variance problem alone, before you go for the variable overhead variances. If I am right, that question number 5 in our notebook, in which we completed the sum calculations, right or not? Now, you should have only a small notes in this regard. To understand and write the notes, let's have the familiarity of the numbers. Tell me, how many units I produce? Everybody start. How many units I produce? How many units I produce? 1000 units. What is the standard speed fixed by the company? 1 hour, 20 units. To produce 1000 units, what is the time allowed? 50 hours. I plan to pay how much rupees? 8 rupees. What is the time actually taken? 40 hours. I paid how much rupees? 9 rupees. So now, I should have spent 400 rupees for the labor cost to produce 1000 units. I spent only how much rupees? 360. Overspent or underspent? Underspent. Savings or excess spending? Savings. Favorable, adverse? Favorable. 40 rupees favorable is the labor cost variance. Right or not? Why the cost is saved? Maybe due to rate or maybe due to efficiency. I plan to pay at how much rupees? 8 rupees. But I paid up at how much rupees? I paid up 9 rupees. Am I overpaying, underpaying? Overpaying. 1 rupee overpaid. For how many hours? 40 hours. So the rate variance is 40 adverse. Efficiency, what we said is 50-hour job that person has done in how many hours? 40 hours. A 50-hour job has been done in 40 hours. We said the workers have saved for the company how many hours? 10 hours. And the labor cost saved is 10 hours into 8, 80 rupees. Favorably we calculate efficiency variance. Respond, yes or no? That we said it is not correct because there was a 8 hours lost due to power cut in that particular sum. Yes or no? In fact, they might have come to the company for 40 hours, but they worked in the factory only how many hours? 32 hours. The 50-hour job, in spite of power cut, they completed how many hours? 40 hours. If not for the power cut, they would have completed how many hours? 32 hours. The real efficiency of the worker is not 10 hours saving, but how much? 18 hours saving, because it is very important for them, because their bonus are related to the time saved. Everybody following not? In that case, the revised efficiency variance is 18 hours into 8, 144, favorable. Respond, yes or no? And we calculate a variance called as idle time variance. How many hours idle time? 8 hours. You know how much rupees? 8 rupees. 64 adverse we called as idle time variance in that particular sum. You all remember or not? So when I calculate a revised efficiency variance, there is also 1 minus 3. Yes or no? Only thing is, in column 3, instead of actual hours paid, I use what? Actual hours worked. That's the only change. Everybody following or not? Now, tell me. There are two types of actual hours. All of you participate. There are two types of actual hours. What are two types of actual hours? Actual hours paid, actual hours worked. I may be paid for 40 hours. I cannot say power cut, no wages for you. I cannot say I have to pay for them for the attendance. So no. Actual hours paid is 40. Actual work is what? 32. For calculating rate variance, for calculating what? Rate variance. The 1 rupee I am paying for idle time, working time, both the times are. Solli, 1 rupee I pay extra not. The rate I pay extra for idle time or working time or both? Both. So for rate variance calculation, the word actual hours means what? Actual hours worked. But when I actual hours paid. But when I calculate efficiency variance, first I calculated wrongly, then I take out idle time out. Then when I revise the efficiency variance calculation, I take actual hours means what? Actual hours worked is what is the ultimate conclusion in this particular sum. Everybody following or not? Now, that's some very interesting issues about idle time. We'll discuss in advanced problems later. Can we start or not? Write down notes. Write down notes. Point number 1. Point number 1. $50 hours job. Point number 50 hours job was completed in 50 hours job was completed in 40 hours. 50 hours job was completed in 40 hours, and the workers have saved the company, and the workers have saved the company, and the workers have saved the company 10 hours wages. And the workers have saved the company 10 hours wages. And the workers have saved the company 10 hours wages. Is this right? Is this right? Don't write examination active voice. What is speaking is what? Is this right? Now they'll get an idea. Okay, we had always write in what? Passive voice as a conclusion. Okay, is this right? Question mark. Hey, the answer. Tell me yes or no? No. Write down no. Because 8 hours was idle time due to 8 hours was idle time due to power cut. Because 8 hours was idle time due to power cut. And the workers have completed the job in how many hours? 32 hours. And the workers have completed the job in 32 hours. The real time saving is 18 hours. The real time saving is 18 hours. This is revised efficiency variance. The real time saving is 18 hours. This is revised efficiency variance. This is revised efficiency variance. Okay, point number 1 over now. Point number 2. There are two types of actual hours. There are two types of actual hours. branch it into two. Can you tell me what are two types of actual hours here? Actual hours paid. First branch is actual hours paid. Second branch is actual hours worked. Actual hours paid. Second branch is actual hours worked. Actual hours paid. Actual hours worked. Actual hours paid. Put the down I can write. Considered for calculating. Considered for calculating what variance? Rate variance. Considered for calculating rate variance. Actual hours worked, put it down here I can write. Actual hours paid minus idle time. So you may ask what is actual hours worked? It is actual hours paid minus idle time. Actual hours worked is actual hours paid minus idle time. Actual hours paid minus idle time. Again put that down I can write. Used to calculate efficiency variance. Used to calculate efficiency variance. Stop writing. Whenever I use the word efficiency variance, I always mean what? Revised efficiency. Efficiency is now revised or not? First I calculated it wrongly 80. In that I weeded out what? Idle time variance. Now my real efficiency variance is what? Revised efficiency. Whenever you have an idle time, when I use the word efficiency normally, I mean always what variance? Revised efficiency. That's a real efficiency variance. Yes or no? Used to calculate efficiency variance. Used to calculate efficiency variance. With this, we have completed the solution to that particular problem. Can we move to the next stage or not? Now, give the heading. Variable overhead variances. Like the previous class, we will first have the format written, by hearted, do a problem. Till then, no need to understand anything, and then we'll be discussing the logic. Variable overhead variance also simple, but today very important because we'll be discussing about a very important variance called as fixed overhead variance. Importantly, that variance is going to be very crucial in most of the reconciliation problems later. Okay, now variable overhead variance. Step 1. Step 1. Calculation of standard rate. Step 1. Calculation of standard rate. Calculation of standard rate. Underline that. SR per unit is equal to, SR means standard rate. SR per unit is equal to BVO divided by BO. SR per unit is equal to BVO divided by BO. I think understandable. Budgeted variable overhead divided by budgeted output. Unit and outputs na BVO divided by BO. SR per hour is equal to, SR per hour is equal to, tell me what divided by what? BVO divided by BH. Budgeted variable overhead divided by budgeted hours. SR per hour is equal to BVO by BH. Step 1 over. Next, step 2. Computation table. 3 columns. Always 3 columns. Step 2. Computation table. Column number 1. We have choices. SH into SR or AO into SR. SH into SR or AO into SR. Both gives you the same answer. SH into SR or AO into SR. Second column, AVO. AVO means what? Actual variable overheads. AVO. Third column, AH into SR or SO into SR. Third column, AH into SR or SO into SR. AH into SR or SO into SR. Right, where SH means, where point number 1, SH means, where SH means you should know what SH here? Standard hours for actual output. Same as labor variance calculation. SH means standard hours for actual output. Standard hours for actual output. Point number 2. SO means standard output for actual hours. SO means standard output for actual hours. SO means standard output for actual hours. Point number 2 or 3? 3. Point number 3. When we multiply by hours, use SR per hour. When we multiply by hours, use SR per hour. And when we multiply by output, use SR per unit. And when we multiply by output, use SR per unit. Step 2 over. Step 3, variance calculation. Okay. Center right, variable overhead cost variance. In the center right, variable overhead cost variance. Branch it into 2. It is 1 minus 2. Variable overhead cost variance 1 minus 2. Branch it into 2. Variable overhead expenditure variance 3 minus 2. Variable overhead expenditure variance 3 minus 2. Variable overhead efficiency variance 1 minus 3. Variable overhead efficiency variance 1 minus 3. Variable overhead efficiency variance 1 minus 3. That's all regarding the variable overheads format. It can be mostly understood similar to a labor variance, but not exactly similar. Okay. Now, format is over. I'll give you 1 minute time. By heart it. Then we can just go for a problem. Okay. Now. Don't worry. First, by heart, whether you understand or not, we'll do the problem also without understanding. Then we can just go for discussion of each and every number in the table and understanding the concepts. Shall I proceed? Okay. Tell me. Variable overhead variance. How many steps are there? 3 steps. Name the 3 steps. Calculation of standard rates, computation table, variance calculation. Standard rates. How many standard rates we calculate? 2 standard rates. SR per unit, SR per hour. SR per unit is equal to BVO by BO. SR per hour is equal to BVO by BH. Budgeted variable overheads by budgeted output gives you variable overheads per unit. Budgeted variable overheads divided by budgeted hours gives you what? Variable overheads per hour. The standard rate now overheads per unit or per hour. Why I call a standard? Because I calculate from the budget. I don't calculate from the actuals. Respond yes or no? Now. Next second step. How many columns are there? 3 columns. Name the 3 columns. SS into SR or AO into SR. Second column AVO. Third column AH into SR or SO into SR. And next is you have to calculate the variances. The first variance is variable overhead cost variance. Formula is 1 minus 2. Branches into 2. What are 2 branches here? Efficiency, that is expenditure variance, efficiency variance. Expenditure is 3 minus 2. Efficiency is 1 minus 3. Everybody, are you following or not? No. Again, nothing discussed. Blindly we just what? By hearted it. We'll do one problem. You need not copy the solution also. Then I'll explain and then we can just start copying it. Can I start or not? Now, let's complete one problem in this regard. take, I think, question number 6 in our book. Take question number 6. Shall we start now, please? XYZ company has established following standards for variable factory overheads. Standard hours per unit 6 hours, variable overhead per hour 2 rupees. Actual data for the month are as follows. Actual variable overheads incurred 2 lakhs. Actual output in units 20,000. Actual hours worked is 1,12,000. Required to calculate overhead cost variance, expenditure variance and efficiency variance. Can we start or not? Now, first of all, what the budget says. Budget sets you some target or not. What the budget says. To produce a unit, you should be spending how many hours on it? 6 hours. To produce, you should be spending how many hours? Yeah, 6 hours. And every hour when you work, you are allowed to spend how much rupees are available overheads? 2 rupees. So here we understand that cost driver for the variable overheads throughout this chapter I am going to assume as labor hours. What are the cost driver? Labor hours. There may be other cost drivers like kilowatt hours, etc., etc. We will be discussing in the activity-based costing chapter. In the entire standard costing which we are going to discuss now, we are going to assume that the cost driver is what? Yeah? Labor hours. I'll tell you what do you mean by a cost driver. What do you mean by cost driver? Okay. I'll give an example. See, workbook cost is there for the MTH guy. I don't know. Yes or no? It is having a workbook cost or not? Tell me. The workbook cost moves with what? Number of students. The cost driver for the study material cost is the students. Are you following? What pushes the cost up and down, we call as what? Cost driver. Who is a lorry driver? Person who moves a lorry front and back through reverse gear or what? Front gear. So no. Adangiya. Can I go see? Next. Like that. What is the cost driver? Something which moves the cost up and down. We call as what? Cost driver. For the study material cost, what is the cost driver? Students. For example, for this power cost, okay, the lights and all is there. We are having the projector, AC. These costs are incurred now. Tell me what is what the cost driver here? Number of hours I am working. It is a labor hour. Are you following what I am saying? Like that. Every cost moves with something. Every cost moves with what? Something. What influences that cost to go up and down? We call it as what? Cost driver. Throughout the standard costing chapter, we have a very simple assumption that variable overheads moves with what? Labor hours. If the labor work more hours, I have to spend what? More variable overheads. If they work less hours, I have to spend what? Less variable overheads. I can say there are two cost drivers. One is units, another is what? Hours. Unit is an indirect cost driver. Hour is what? Direct cost driver. Because unit, that is more units, more hours. More hours, more variable overheads. More chapters, more time. More time, more power. Any right or not? No. So, the MTH power cost is influenced by number of chapters. IDT na power cost less. And okay, IDT power cost less. Exactly half the time as costing or not. Now, because the chapters are what? Less. Tax power cost what? Very high. So, no, the chapters are what? Very high. Yeah, okay. See, the number of chapters like number of units. Units influences hours and hours immediately influence what? Variable overheads. So we have two cost drivers. One is the output, another is what? Hours. Output is the indirect cost driver. That is the second level, and the primary level is what? Hours. These are the two cost drivers for variable overheads. It is assumed throughout this particular chapter. Right or not? We'll see some different types of variable overhead cost drivers later in the area called as activity-based costing. We'll be doing some more very interesting standard costing problems later. Everybody, yes or no? So now tell me, number one, variable overheads, what are the cost drivers? What are the primary cost driver? Hours. And the secondary cost driver is what? The output or units. Okay. Now, Budget fixes your target. Now, what the budget says, every unit, how many hours you should take? 6 hours. Every hour, how much should you spend? 2 rupees. So, it sets your target for hour and then also the hours for the unit. Everybody right or not? Now, this is going to be the budget. Come to the actuals. Actually, how many units I produce? 20,000. By working how many hours? 1,12,000. By spending how much rupees? 2 lakh rupees. These three are what has actually happened. Everybody up to this, are you following or not? Now, based on this data, I am asked to calculate what? Variable overhead variance. Okay, I am not going to discuss any logic. This itself is too much. I explain the question, that's all. We'll just blindly do it. Suppose you don't know any logic, you cannot understand anything at all. Still we can do what? Variance calculation. Let's blindly do it and then go for the elaborate discussion. Can we start or not? No. The first step is to calculate what? Is to calculate what? Standard rate. Okay, then alone I calculate in the sheet. Tell me. No need to copy. Question number 6. Okay. Step 1 is calculation of standard rate. Please. Standard rate per hour is given in the question or not? Yes. Look at the column. Every hour I am allowed to spend how much rupees as variable overhead? Tell me how much rupees? In how much rupees? Yeah, 2 rupees. The budget says variable overheads per hour is going to be how much rupees? Yeah, 2 rupees. Whatever budget says is a standard or a target, yes or no? So the SR per hour is equal to how much rupees? Yeah, rupees 2 per hour. Everybody following or not? Now, next I have to find out what? Standard rate per unit. Okay. 1 unit, how many hours? 6 hours. The budget says every unit comes how many hours? 6 hours. And 1 hour how much is allowed? 2 rupees. So the standard rate per unit is how much rupees here? Rupees 12 per unit is the standard rate per unit. Response yes or no? So the budget says for every unit you are allowed to spend how much variable overhead? 12 rupees. Or for every hour you are allowed to spend how much rupees here? 6. That is 2 rupees is what the budget says. This is a SR per unit and SR per hour. Okay. Don't always go by formula. I gave the formula as what? BVO by BO and BVO by BH, which will be used when the numbers are given that way. Everybody, are you following or not? Now, understand that the standard comes from actuals or budget? Budget. It comes from budget. That's all. Everybody following or not? Now, the second step is to do what table? Computation table. Now, this computation table, I have given choices or not? The choices are given to make your life easy because we are all lazy persons. No, accept yes or no? We are very lazy persons. We don't want to calculate. Everybody should be what? Like fast food, ready-made what? Available. Hence, I gave you choice. Whichever is available, that can be used for what? Calculation purpose, not to get confused. Can you perceive? Now, look at the next. Second step is what? Computation table. Tell me how many columns are there? 3 columns. First column is what? SH into SR or AO into SR. Second column is what? AVO. Third column is what? AH into SR or SO into SR. Blindly tell me first SH given or AO given? SH means standard hours for actual output. AO means what? Actual output. In the question have they given SH or AO? What is straight away given? AO. What is actual output? 20,000 units. Into when multiplied by units, I should use per unit or per hour per unit. So it is 20,000 units into how much rupees here? That gives you the first column. Response yes or no? Second column AVO ready-made available. What is actual variable overhead? 2 lakhs. AH given a SO given a. AH means actual hours. SO means what? Standard output for actual hour. Which is given straight away? AO or SH? AH is what? Given. What is AH given the question? 1,12,000. Hour should be multiplied by per unit or per hour? Per hour. 1,12,000 into 2. If I multiply, I will be getting 2,40,000. 2 lakhs and 2,24,000. Response yes or no? What is the cost variance? 1 minus 2. What is 1 minus 2? 40,000. Favorable, adverse? Favorable. Branches into expenditure? 3 minus 2. What is 3 minus 2? 24,000 favorable. What is efficiency? 1 minus 3. What is 1 minus 3? 16,000 favorable. Is a variable overhead variances calculation. Everybody following or not? Nothing discussed. Calculation only made. Are you following up? No. In this, anything you calculated? I given choice. If they give you SH, write SH. If they give you AO, write AO. Don't say whatever they don't give any, both of them. Yeah? One should be what? Surely given. So based on choice, whatever given, take the number, appropriately multiply by SR per unit or SR per hour. The variances can be quite easily calculated. Up to this, everybody following or not? No. No need to copy. I will now do the problem once again in the sheet, where I'll write both SH into SR as well as what? AO into SR. I'll write AH into SR as well as what? SO into SR, and then do the explanation. Then we can just copy the solution. Can I proceed or not? Now, let's start with the problem solution once again. Okay. Tell me, step 1 standard rate is over or not? Now, all of you participate. Step 2 is what? Computation table. I want everybody to participate. Tell me, what is first column? SH into SR or AO into SR. Second column is what? AO. Third is what? AH into SR or SO into SR. This is column 1. This is column 2, column 2. Okay. Can you start or not? No. Already we know AO into SR. I have to only calculate what? SH. What is SH? Standard hours for actual output. We calculate labor variance, na same calculation only is for variable overhead variance also. Standard hours for actual output. Can we calculate or not? Tell me. We have to use what ratio? Input output ratio. Everybody follow. Working note number 1 is what? Standard hours for what output? Actual output. That's the meaning of SH. Can you perceive? Now, input, output. Tell me, the budget says for every unit, how many hours allowed? 6 hours allowed. I produce how many units? 20,000 units. So how many hours are allowed? 1,20,000 hours. This is what I call as what? Standard hours. I write here, standard how many hours? 1,20,000 hours into, what is the standard rate per hour? 2 rupees. What the actual output? 20,000 units. What is the standard rate per unit? 6. Both will give you how much here? 2,40,000. Everybody, are you following or not? No. 20,000 into 12. Sorry, gives how much? 2,40,000. Next. Okay. What is the second column here? 2 lakhs. Is going to be AVO given as what? 2 lakhs. Now, third column, AH. Actual hours given a? Yes. What actual hours? 1,12,000 hours. You know what is the standard rate per hour? 2 rupees. I have to find out standard output? No. Tell me, expansion. What is standard output? Standard output for what hours? Actual hours. It means standard output for what hours here? Actual hours. Can I proceed or not? Same ratio, input, output ratio. Tell me, 1 unit, how many hours? How many hours here? 6 hours. How many hours actually work? 1,12,000 hours. So what should be the units here? 1,12,000 divided by 6 gives how many hours? 18,667 units. Is what I call as standard output. Very simple, yeah. Now, I have worked how many hours? 1,12,000 hours. In this 1,12,000 hours, how many units I should have produced? Is called as what output here? Standard output. Two things. Standard hours means for the output of 20,000 units, I should have taken how many hours? 1,20,000 is one way. Another thing is, I have worked how many hours? 1,12,000. Units I should have produced how many units? 18,667 is what I call a standard output. Everybody yes or no? Now, tell me SO into SR. What is standard output? 18,667 units. In what is standard rate? 12. That also gives how much to be? Same 2,24,000 rupees. Everybody up to this, are you following or not? No. And the actual variable is going to be how much here? 2 lakhs. Okay, if you want, you can also write in per hour also. AV AH into AR. Gadaba. You can be called as AH into AR or not? Now, tell me, I know AH is how much here? 1,12,000 hours into actual rate is 2 lakh divided by 1,12,000 hours. I want a number. How much going to be? So, 2 lakhs divided by 1,12,000 hours. What's the number? 1 point? 79, which is approximately 1.79. I found it as a balancing figure. All this I am writing for my explanation purpose. Everybody following not? Now, these calculations, everybody following? Huh? No. Let's start with our discussion regarding what is this variable overhead variance is all about. Okay. Now, before that, what is 1,20,000 hours? What is that here? Standard hours. To produce 20,000 units, how many hours allowed? 1,20,000. What is this 18,667 units? 1,12,000 hours should have produced how many units? 18,667. Remaining numbers are straight away known to you. No need for explanation. Everybody, can we start or not? No. Let's start with the understanding of this variance. For understanding's sake, let us assume power cost as a variable overhead. Yes or no? Power cost fixed or variable? More units I produce, more hours I run. More hours I burn the electricity, more the power cost. Generally, power cost driver is kilowatt hours, because how many hours I am working alone not important. How many watts I am burning also is what? Important. But we said that for simplicity, in throughout this chapter, I assume the cost driver to be what? Labor hours. You don't question that. Can I answer or not? Now, tell me, the cost I am just giving as an example is what cost? Power cost. Tell me, power cost is driven by what? Is primarily driven by number of hours, and the hours is driven by what? Number of units. Units is only the secondary cost driver. The primary cost driver is what? Hours. Up to this, I have the clarity or not? Now, see, I have produced how many units? All participate. How many units I have produced? Whenever I ask a question, don't look blank, yeah? That alertness required. I produce how many units? So 20,000 units I produce or not, the company says, for your output, you should have spent how much rupees for power cost? 2,40,000. The power cost allowed, EB bill allowed is how much rupees? 2,40,000. Actually, what is that I have paid? 2,00,000. I saved cost, overpaid, saved. That's a 40,000 savings in variable overheads. Yes or no? So the variance is 40,000 favorable. Respond, are you following or not? No. Let's see from the hourly angle, everything. Okay. Now, the question is, sir, why is the power cost is saved? Question arises, no. It may be due to two reasons. Reason number one is, the government might have cut what? The power rate, so the power cost would have saved. So no, it is called as what? Expenditure. Or I may be consuming what? Lesser number of hours, burning what? Less power. In that case, also power cost can be what? Saved. The savings in variable cost can arise due to the change in the expenditure or change in what? Efficiency. Up to this, are you following or not? Very simple. See. 2 rupees per hour is what I plan to pay as a EB bill. Yes, 1 hour I burn this room. Now burn this room means what? Burn the power of this room. Okay, example. Okay. Okay. Our room I can understand. I can understand your feelings. Okay. Now, 1 hour if I use power in this room, accepted? No. Then I am allowed to spend 2 rupees as power cost. You know, I just estimate. Normally I estimate. So a room, if it works for 1 hour, people easily understand that in this room what are all the equipments working. Yes or no? So one can easily estimate what? Power cost. So 1 hour power cost is understood to be how much rupees here? 2 rupees. Ultimately, there will be a change in tariffs. There can be change in what? Tariffs. Where per hour when I burn the power, due to the unit reduction, power unit reduction cost, what happens is, it worked out only how much here? 1.79. This 21 paise savings in power cost is due to what? The rate change, which I call as what? Expenditure variance. Simple, straightforward. Everybody following or not? So, instead of paying 2 rupees per hour, I ended up in paying only how much? 1.79 per hour. So, the difference of what? 21 paise per hour. For how many hours? 1,12,000. Rounding up is going to happen. He is going to give me what variance here? Variable overhead, expenditure variance. Point number 1. Accepted or not? Okay. Next is what? Efficiency. Very simple. 20,000 units I produce. For the 20,000 units production, I am allowed to work in the room for how many hours? 1,20,000. But I work only how many hours? 1,12,000. 8,000 hours I save for the company or not? When a worker saves 8,000 hours, not only his wages is saved for the company, also the overhead is saved. If I complete the batch earlier, suppose MTH pays me on hourly basis, for example, if I complete the batch what? Earlier, then will MTH save my wage bill, also the power cost? Suppose 180 hour batch, I completed in 18 hours. Okay, MTH happy or not? For example, okay. There is so much savings in what power cost because only with the labor work, the variable overheads are what? Consumed. Everybody following in what? In that case, 120,000 hours job, he done in how many hours? 1,12,000 hours. He is efficient or inefficient? Efficient. Due to efficiency, how many hours save? 8,000. Every hour saving saves how much power cost? 2 rupees. 8,000 hours? 8,000 hours, 16,000 rupees is the efficiency variance. Respond. Are you all following or not? So it is one way of understanding the efficiency. 1,20,000 hours job. I did how many hours? 1,12,000. I saved for the company 8,000 hours. When I don't work for 8,000 hours, I don't consume the expenses. Variable hours also for what? 8,000 hours. 8,000 hours power cost has been saved, resulting in 16,000 rupees cost saving. Point number 1. Accepted or not? Next. We can measure efficiency other way around also. This is another way to understand it, important. Okay, see. I worked for how many hours? 1,12,000 hours. Accept that. In this 1,12,000 hours, I should have produced how many units? 18,667. But I produced how many units? That means 1,333 units is produced without power cost. I can imagine like that. Are you following what I am saying? In other words, with 18,667 units power cost, I produce how many units? 20,000 units. That means I can literally say 1,333 units has not taken any power cost. Yes or no? Every unit is having how much cost here? 12 rupees. 1,333 gives how much? 16,000 rupees is the savings in power cost. Yes or no? I can measure my efficiency in two ways. In the time taken, in the output produced. Yes or no? In the output produced, I should have produced how many units? 18,667. But I produce how many units? 20,000. I produce more or less? More. With the same cost, when I produce what? More. The extra units can be imagined to be produced what? Free of cost. For that I need not spend any 12 rupees extra. It or not? In that case, the cost savings is 1,333 units into 12 rupees. Is the cost saving 16,000 favorable? Are you following or not? This is one should be understanding the efficiency variance. No. So with this we complete. This is a very simple and small variance only. This variable overhead variance. I can say it can be understood as simple as a labor variance. How labor varies, variable overhead also what? Varies. Labor rate variance is variable overhead expenditure. Labor efficiency is variable overhead efficiency variance. The cost labor also is what? Labor hours. Wages are influenced by labor hours. So do what? The variable overhead assumption. So this is regarding the variable overhead variances. Respond. Are you following? With this we complete this. Let us summarize and then have the copying of the solution with the notes. First tell me how many steps are there to calculate DO variance? Step number 1 is what? Standard rate. Step number 2 is what? Computation table. Step 3 is what? Standard rate. How many standard rates? 2 standard rates. SR per unit. Both standards comes from actuals or budget. SR per unit is equal to BVO by BO. SR per hour is equal to BVO by BN. Sometime based on question, the calculation may little bit change. Okay. Next is step 2. Computation table. How many columns? 3 columns. Can name the 3 columns? SH into SR or AO into SR, AVO, AH into SR or SO into SR. In all this, assumption is cost driver is labor hours primary and production units is secondary cost driver. In this, tell me what is SH standard hours for actual output. What is SO standard output for actual hours. Then we calculated variances. Cost variance is 1 minus 2. Branches into expenditure efficiency. Expenditure is 3 minus 2. Efficiency is 1 minus 3. Can you start doing the solution or not? Write down first. Question number 6. Write question number 6. Let's write quickly. Question number 6. Step 1. SR. Don't talk please. Question number 6. Step 1. Standard rates. Underline that. Step 1. Standard rates. Okay. Standard rate per hour is equal to SR per hour is equal to SR per hour is equal to rupees 2 per hour. SR per hour is equal to rupees 2 per hour. You can just write given. It's given in the question. Standard rate per hour is rupees 2 per hour. SR per unit is equal to 1 unit, how many hours? 6 hours. 1 hour, 2 rupees. SR per unit is equal to 6 hours into 2 rupees. 6 hours into 2 rupees. What is SR per unit? 12 per unit. SR per unit is equal to 12 per unit. Step 2. Computation table. First sum alone, write both the options. Exam la whichever is given, that can be written, problem can be completed. Okay, computation table. SH into SR or AO into SR, column 1, SH into SR or AO into SR, column 2, AVO, column 3, AH into SR or SO into SR, AH into SR or SO into SR. We can write the working note later, write the number first. 1,20,000 hours into 2, 1,20,000 hours into 2 or 20,000 units into 12. 1,20,000 hours into 2 or 20,000 units into 12. The total is how much? 2,40,000. 2,40,000. AVO given 2 lakhs. AVO given 2 lakhs. Just for understanding, 1,12,000 hours into balancing figure is 1.79. 1,12,000 hours into 1.79. You got a 1.78 something and rounded off just for convenience. 1,12,000 hours into 1.79. Third column, AH into SR, 1,12,000 hours into 2, 1,12,000 hours into 2, 18,667 units into 12. 1,12,000 hours into 2, 18,667 units into 12. 2,24,000. 2,24,000. Working note number 1. Standard hours for actual output. Working note number 1. SH means standard hours for actual output. Standard hours for actual output. Input output ratio 1 unit 6 hours. Output is 1 unit, input is 6 hours. 1 unit 6 hours. Who fixed this? Yeah, budget. Okay, 1 unit 6 hours. What the actual output? 20,000 units. 20,000 units. What the time allowed? 1,20,000 hours. 20,000 units, 1,20,000 hours. Working out number 2, SO for actual hours, standard output for actual hours. Working out number 2, standard output for actual hours. Input, output. 1 unit, 6 hours. 1 unit, 6 hours. Output 1 unit, input is 6 hours. How many hours actually work? 1,12,000 hours. 1,12,000 hours. Question mark, how many units? 18,667 units. 18,667 units. Step 3, variance calculation. Step 3, variance calculation. Variance calculation. Now tell me, center la, what is the first variance? Variable overhead cost variance. Classroom I write the abbreviation, not in exams. Okay, variable overhead cost variance. The formula is 1 minus 2. Variable overhead cost variance, the formula is 1 minus 2. Tell me what is 1 minus 2 cost variance? 40,000 favorable. It branches into 2. First branch is variable overhead expenditure variance. Second branch is what? Variable overhead efficiency variance. Variable overhead expenditure variance, variable overhead efficiency variance. Expenditure is what? 3 minus 2. Efficiency is 1 minus 3. 3 minus 2, tell me how much it is favorable? 24,000 favorable. 1 minus 3, 16,000 favorable. 24,000 favorable and then 16,000 favorable. This is regarding the variable overhead variance calculation. Can I proceed or not? No. Write down notes. Write down notes. In the entire chapter, point number 1, in the entire chapter, we assume labor hours. We assume the labor hours as the primary cost driver. In the entire chapter, we assume labor hours as the primary cost driver for overheads. We assume labor hours as the primary cost driver for overheads, and the output as what? Secondary cost driver. And the output as the secondary cost driver. Point number 2. In other words, more the output, more the labor hours. More the output, more the labor hours. And more the labor hours, what happens? More the variable overheads. And more the labor hours, more the variable overheads. I am just showing you the link, how the cost driver works. Output is a cost driver for hours, hours a cost driver for the variable overheads. Can I proceed or not? Next. Point number 2 or 3? 3. For the 20,000 units output, the cost allowed is, how much rupees? 2,40,000. But actually spent is only, the cost allowed is 2,40,000, but actually spent is only 2 lakhs. Thus, there is a savings in variable overhead cost. Always write VOH in the class. Thus, there is a savings in variable overhead cost. How much rupees? 40,000. Thus, there is a savings in variable overhead cost of rupees 40,000. Point number 2. Point number 4. Okay. No. I said correctly. That is the second point explaining this table. Understand? Now, say point number 4. Really mean the right point number 4. I am not telling section number 12 correctly. Right point number 4. The variable overhead cost may vary due to 2 reasons. The variable overhead cost may vary due to 2 reasons. Branch it into 2. The variable overhead cost may vary due to 2 reasons. Branch it into 2. First branch, expenditure change. Second branch is what? Change in efficiency. Expenditure change. Second branch is change in efficiency. Expenditure change, put a down mark and write. Plan to pay 2 rupees per hour. Expenditure change, right? Plan to pay 2 rupees per hour, but paid only, fill in the blank, but paid only how much? 1.79 per hour. Plan to pay 2 rupees per hour, but paid only 1.79 per hour. Saving 0.21 for saving rupees 0.21 for how many hours? 1,12,000 hours. Saving 0.21 for 1,12,000 hours, which is equal to, can you multiply and tell me what is 0.21 into 1,12,000? Tell me the number here. 24,000 approximately is equal to 24,000. 0.21 for 1,12,000 hours is equal to 24,000. Yes or no? Come to efficiency. Write down. Efficiency, instead of having a branch, we'll write separately now. That right. Point number 4 or 5? 5. Efficiency can be seen in two ways. Efficiency can be seen in two ways. Efficiency can be seen in two ways. Branch it into two. In terms of hours, branch it into two. In terms of hours, second is what? In terms of output. In terms of hours, in terms of output. In terms of hours, put a down arrow mark and write. In terms of hours, put a down arrow mark and write. 1,20,000 hours job has been done in 1,20,000 hours job has been done in how many hours? 1,12,000 hours. 1,20,000 hours job has been done in 1,12,000 hours, saving 8,000 hours variable overheads. Saving 8,000 hours variable overheads. Saving 8,000 hours variable overheads. If you see in all my discussion, the cost lever is hours. Even though I produce more units, generally what we say, variable overheads moves along with the units. But generally, overheads are not moving with units, are moving with what? The hours, in our case, primary cost driver. Can you see? So, thereby saving 8,000 hours variable overheads. In bracket write 8,000 hours into 2. In bracket write 8,000 hours into 2 is equal to how much rupees? 16,000 F favorable. 16,000 F favorable. Bracket close. Come to the right hand side. In terms of what? Units. Put it down again, right? In 1,12,000 hours, in 1,12,000 hours, the company should have produced, in 1,12,000 hours, the company should have produced how many units? 18,667 units. In 1,12,000 hours, the company should have produced 18,667 units. But produce how many units? 20,000 units. But produce 20,000 units. Therefore, the 1,333 units are produced. Therefore, the 1,333 units are produced without any extra labor hours and variable overheads. Therefore, the 1,333 units are produced. The 1,333 units are produced without any extra labor hours and variable overheads, resulting in a savings of, without any extra labor hours or variable overheads. See, 18,067 units only should have produced. Now produce how many units? 20,000. For the 1,333 units, you take any more extra hours than 1,12,000? No. That means I have produced 1,333 units without any extra labor hours or variable overheads. Without any extra labor hours or variable overheads. Thereby saving a cost of 1,333 into 12, thereby saving a cost of 1,333 into 12. How much rupees? 16,000. Thereby saving a cost of 1,333 into 12 is equal to 16,000. Is equal to 16,000. With this, we complete a small variance called as what? Variable overhead variance. Can you move to the next variance? Fixed overhead variance or not? No. Very important. I'll say we'll know very well about fixed overhead variance only at the end of the chapter. We'll revisit this variance again and again as I progress deeply into various other aspects of the chapter. Can you proceed? Now, give the heading fixed overhead variance. Give the heading fixed overhead variance. Before that, don't get irritated. Tell me how many steps are there for variable overhead variance? 3 steps. Step 1 is what? Standard rate. SR per hour is equal to BVO by BH. SR per hour unit is equal to DVO by DO. Step number 2 is what? Computation table. Tell me the 3 columns. SH into SR or AO into SR, AVO, AH into SR or SO into SR. Third step is calculation of variance. First variance is cost variance. Formula is 1 minus 2. Branches into expenditure Efficiency. Expenditure is 3 minus 2. Efficiency is 1 minus 3. With this we have completed response. Can I proceed or not? No. Fixed overhead variances. Okay. Yes, Ivan. Yes, switch on, switch off. All switch on. Okay. I communicated. No more opinion. Can I proceed? Now. See. Next variance is fixed overhead variances. Same 3 steps, right? Step 1. Right, step 1. Calculation of standard rates. Calculation of standard rates. SR per unit is equal to BFO by BO. That is budgeted variable overheads going to be budgeted fixed overheads. BFO by BO. SR per hour is equal to BFO by BH. SR per hour is equal to BFO by BH. Don't try to understand logic and all. It is a different issue. We'll discuss at the end of the calculation. Just by heart it and do it. Step 2. Computation table. Step 2. Computation table. You're going to have 5 columns. 1, 2, 3, 4 and then 5. Computation table, 5 columns. 1, 2, 3, 4 and 5. Can you start or not? Now, first column is same as variable overheads. What is the first column here? SH into SR or AO into SR. First column is SH into SR or AO into SR. What is second column in variable overheads? AVO. Here is going to be what? AFO. Actual fixed overheads. Third column. What is third column? This is different. It is BFO. Budgeted fixed overheads. One extra column. Budgeted fixed overheads. Bracket right. BO into SR or BH into SR. BO into SR or BH into SR. BO into SR or BH into SR. Fourth column is same as third column variable overhead. What is the fourth column? AH into SR or SO into SR. AH into SR or SO into SR. Last column is PFO. Last column is PFO. In bracket write BFO into AD by BD. Budgeted days. Okay. BFO into the actual days divided by budgeted days. Added like that. BFO into actual days divided by budgeted days. Listen. Where PFO means possible fixed overheads. Where PFO means possible fixed overheads. AD is equal to actual days. AD is equal to actual days. BD is equal to budgeted days. BD is equal to budgeted days. Can I proceed or not? No. Next, step 2 or step 3? Step 3. Variance calculation. Please. Step 3. Variance calculation. Center right, fixed overhead cost variance. 1 minus 2. Fixed overhead cost variance 1 minus 2. Branch it into 2. Fixed overhead expenditure variance. First branch is fixed overhead expenditure variance 3 minus 2. Fixed overhead expenditure variance 3 minus 2. Second branch is fixed overhead volume variance. fixed overhead, volume variance. One of the villain of this chapter, fixed overhead, volume variance, 1 minus 3. There are so many discussion about this through this chapter, fixed overhead, volume variance, 1 minus 3. Volume variance branched into 3. Volume variance branched into 3. Fixed overhead, capacity variance, 4 minus 5. Fixed overhead, capacity variance, 4 minus 5. Fixed overhead, calendar variance, 5 minus 3. Fixed overhead, calendar variance, 5 minus 3. Fixed overhead, efficiency variance, 1 minus 4. Fixed overhead, efficiency variance, 1 minus 4. Capacity 4 minus 5, calendar 5 minus 3, and is 1 minus. If you cancel this, 4 minus 5 plus 5 minus 3 plus 1 minus 4, what happens here? 4 minus 5 plus 5 minus 3, 5 and 5 gets cancelled, becomes what? 4 minus 3. Plus 1 minus 4 becomes what? 1 minus 3. Plus 3 minus 2 becomes 1 minus 2. That's a breakup. Okay, this is regarding the fixed overhead variance calculations. Okay. Every variance with ultimate conceptual knowledge will be discussing, but we cannot enter into discussion straight away without having a number. Okay, so first by heart it, blindly we can apply and do a problem and then discuss each and every variance threadbare. But I can say more discussion will follow at the later stage of this chapter for the fixed overhead variances. Okay, now please I'll give you 2 minutes time, by heart it quickly. What you are doing? I think it's an idle time. Can I proceed? No. Then use it. Okay. Like variable overheads, how many steps are there? 3 steps. Step 1 is standard rate calculation. Step 2 is computation table. And step 3 is variance calculation. Standard rate, SR per unit is equal to everybody SR per unit is equal to BFO by BO. SR per hour is equal to BFO by BH. Step 2, computation table has got how many columns? 5 columns. Column 1 is SH into SRR, AO into SR. Column 2 is AFO. Column 3 is BFO. BFO is what? BH into SRR, BO into SR. Column 4 is AH into SRR, SO into SR. Column 5 is PFO. PFO is equal to BFO into AD divided by DD. This is regarding the variance calculation, that is the computation table, where PFO can be expanded as possible fixed overheads, and AD is actual days and BD is budgeted days. Variances, the main variance we call as what? Fixed overhead cost variance. The formula is 1 minus 2. Branches into, what are 2 branches? Expenditure variance 3 minus 2, volume variance 1 minus 3. The volume branches into 3. Name the 3 branches: capacity variance, calendar variance, efficiency variance. Capacity variance is 4 minus 5. Calendar variance is 5 minus. Efficiency variance is 1 minus 4. Okay, nothing we have done, just written the format, by hearted it, without having any logic. Let's first complete the problem. Once the problem is over, I'll tell you what is the meaning of a fixed overhead variance and how each and every variance are calculated and what are their logics. Can I proceed or not? Now, let's start with the question number 7. Take question number 7. Please settle down. Now, till now, chapter was different, very simple and easy. Now also simple only, nothing difficult. But from now onwards, what I am going to discuss are all very, very important. If you miss that now, doing the advanced reconciliation problems and all, will not be able to understand where the number is coming, where the number is going. Logically, I can say the chapter really starts from now only. Okay. Till now, it is only a routine and simple calculations. Now only the real chapter starts from fixed overhead variances. So, don't be playful. Can we start or not? No. Okay. The manufacturing company, can I start? Okay. The manufacturing company operating a standard costing system has the following data in respect of July. Actual number of working days 22, actual hours were 8,600, units produced 850, actual fixed hour is going to be 3,600. All these are budgets. What has happened? I worked in this month for how many days? 22 days. I worked for how many hours? 8,000. I produced how many units? 850. I paid how much fixed cost? 3,600. Respond yes or no. All these are actuals. Next. The following information obtained from the company's budget and standard cost data. Budget and standard are taken from the budgets. Okay. Now, the budget says how many hours I plan to work this month? How many days I plan to work this month? 20 days. How many hours I plan to work? 8,000 hours. And how many hours per unit allowed here? 10 hours. The speed is how much? 10 hours per unit. And the standard fixed overheads per hour is going to be how much? 0.5. Don't ask me why fixed hours per hour and all. Don't ask me any logic. We'll discuss everything later. These are all the budgets given. Our role is only to take the number from the problem, put into the format, calculate all the variances. There ends our role. Then you leave it to me. I'll make you understand each and every aspect of the calculation. Can we start or not? Now, tell me, what the first step? Now, what the first step is? Standard rates. Write down question number 7. Step 1. Calculation of standard rates. We are going to do it together. Step number 1, calculation of standard rates. Calculation of standard rates. Okay. Right. Standard rate per hour. We'll do it together. You should tell me the answer. Standard rate per hour. Standard should come from actuals or budget? Budget. Look at the budget numbers. Standard fixed overhead rate per hour is how much? 0.5. Standard rate per hour is equal to 0.5 per hour. Standard rate per hour is equal to 0.5 per hour. Bracket right? Given. We did not do anything given in the question. Do you locate the number? They said standard fixed overhead rate per hour is how much? 0.5. Next. Standard rate per unit. Standard rate per unit. Listen here. 1 unit, how many hours? 10 hours. 1 hour, 50 paise. It is 10 hours into 0.5. Standard rate per unit is 10 hours into 0.5. 10 hours into 0.5. Tell me what is 10 hours into 0.5? 5 rupees per unit. Standard rate per unit is 5 rupees per unit. 5 rupees per unit. Can I proceed or not? Now, step 1 is over. SR per hour and SR per unit is calculated. Can I go to step number 2 or not? Right, step 2. Computation table. Step 2. Computation table. When I gave you choice, whichever is available, that can be written. No need to write both choices. Can I proceed or not? No. How many columns are there? 5 columns. 5 columns. Do along with me. Column 1, SH into SR or AO into SR. SH into SR or AO into SR. Tell me, what is column 2? AFO. I want you all to tell and write. Column 2 is AFO. Tell me what is column 3? BFO. Bracket, what is BFO? BO into SR or BH into SR. You write that not in the slide, you write it. BO into SR or BH into SR. Column 4 is what? AH into SR or SO into SR. AH into SR or SO into SR. Column 5 is PFO. Column 5 is PFO. Bracket la BFO into AD by BD. BFO into AD by BD. Now, are we busy or lazy? We are a lazy person. We don't like to calculate anything. Yes or no? Always number should be ready-made. For that only choice is given. Can we start or not? Tell me first. Standard hours given. Actual output given. Look at the workbook. What is given? Everybody is. SH given. AO given. AO. What is AO given? 850 units. So in the notebook, 850 units into per unit should I use per hour? Per unit. What is per unit? 5 rupees. 850 units into 5 rupees. 850 units into 5 rupees. AOI into SR. 850 units into 5 rupees. Yes or no? Next, AFO. What the actual fixed overhead which has been incurred? 3,600. Actual fixed overhead incurred is 3,600. Listen here. BO given, BH given. Look at the question. Look at the budget here. BO given, BH given, BH. What the budget hours? 8,000 hours. 8,000 hours into what? 0.5. 8,000 hours into 0.5. Right then, 8,000 hours into 0.5. Okay. Fourth column, AH given, SO given, AH. What actual hours given? How many hours here? 8,600. 8,600 into 0.5. 8,600 into 0.5. 8,600 into 0.5. Now, if you see BFO 4,000, look at your notebook here. Column 3 is 8,000 into 0.5 is what? 4,000. What is PFO? 4,000 into 22 by 20. 4,000 is the budget of fixed overheads. 22 is actual days. 20 is what? Budgeted days. 4,000 into 22 by 20. Don't worry about the logic or your understanding how the numbers are taken and written or not. Now, 4,000 hours into 22 by 20. This is regarding the calculation of columns. First column, tell me what is the total? 4,250. Multiply number is 4,250. Second column, the number is 3,600. Third column, it is 4,000. Fourth column, 4,300. The last column is 4,400. 4,400. These are all the 5 columns calculated in the computation table. Can I proceed to the third step or not? Write down step 3. Step 3. Variance calculation. Step 3. Variance calculation. Step 3. Variance calculation. Okay. Tell me the first variance. What is the first variance? Fixed overhead, cost variance. Let's do it together. Fixed overhead, cost variance. 1 minus 2. Fixed overhead, cost variance, 1 minus 2. Look at the notebook and tell me what is 1 minus 2? What minus what? 4,250 minus 3,600. What's the number? Is going to be how much it is? 650 favorable. Column 1 minus 2, 650 favorable. Branch it into 2. Branch it into 2. First branch is what? Fixed overhead, expenditure variance. Fixed overhead, expenditure variance. 3 minus 2. Fixed overhead, expenditure variance, 3 minus 2. What is 3 minus 2 expenditure variance? It is 4,000 minus this gives how much? 400 favorable. 4,000 minus 3,600, 400 favorable. Second branch is fixed overhead, volume variance. Names and all should be remembered properly. Fixed overhead, volume variance. The formula is 1 minus 3. The formula is 1 minus 3. What is 1 minus 3 volume variance? 4,250 minus 4,000 is 250 favorable. Volume variance is 250 favorable. Volume, please branch it into 3. Volume branch it into 3. First branch is what? Fixed overhead, capacity variance. First is fixed overhead, capacity variance. Formula is what? 4 minus 5. Capacity is 4 minus 5. It is how much? 100 adverse. 4 minus 5, 100 adverse. Fixed overhead, calendar variance. Fixed overhead, calendar variance. 1 minus 5 minus 3. Calendar variance 5 minus 3. What is 5 minus 3? It is how much? 400 favorable. 5 minus 3, 400 favorable. Fixed overhead, efficiency variance. Fixed overhead, efficiency variance is the third branch. It is 1 minus 4. Efficiency 1 minus 4, it is 50 adverse. 1 minus 4, 50 adverse. Now, 2 stages you have completed. We are written the formatted by hearted it, and then also applied it to do a what? Problem. Only thing which is the most important thing is to understand all this number clearly so that we'll be able to interpret it in the later stages. Can we start with our discussion or not? Now, before I go for discussion, I want you to be very familiar with the formats. Okay, tell me. First step is to calculate what? Standard rate. SR per unit is equal to everybody. BFO by BO. SR per hour is equal to BFO by BH. Second step is computation table. How many columns? 5 columns. First column, SH into SR or AO into SR, AFO, BFO. What is BFO? BO into SR or BH into SR, AH into SR or SO into SR, PFO. What PFO? BFO into AD by BD. Cost variance is 1 minus 2. Classified into what are two variances? Expenditure, volume. Expenditure 3 minus 2. Volume 1 minus. Volume branches into capacity 3. Namely capacity, calendar, efficiency. Capacity, calendar, efficiency 1 minus 4. This is regarding the fixed overhead variance calculations. Now let us start with the discussion. No need to write. Once I complete that, I'll be telling you what to do. Can I start or not? Let's start with the discussion. Yes. On, off. Can I proceed? No. That's simple. Okay. Okay. Let us start from the beginning now, the discussion. Please carefully follow what I am telling point by point. 7 or 8 points needs to be discussed to understand to some extent the fixed overhead variance. More we'll discuss during sales variance and balance scorecard and other issues. Okay, let's understand to this stage what do you mean by a fixed overhead variance. In the last class, when I started this chapter, I said cost variance compares what and what cost? Standard cost. And then what? Actual cost. And not what? Budgeted cost and then actual cost. Tell me, what is a budgeted cost? What is a standard cost? Both are what? Budgets. Budgeted cost is budgeted cost for budgeted output and standard cost is budgeted cost for actual output. It is a flexible budget, yes or no? Yes, sir. Originally I prepared a budget for 10,000 units. When I produce only 8,000 units, the periodic budget, I revise my budget for what? 8,000 units. I prepare a flexible budget and then compare the flexible budget with what? Actual or not the original with actual is the main objective of a cost variance calculation, yes or no? Yes, sir. Material variance, what is column number 1? SQ into SP. That is budgeted material cost, standard material cost, standard material cost. It is a material cost for what output? Actual output. Material cost allowed for actual output or budgeted material cost for actual output is column number 1 material cost. Yes or no? Yes, sir. Second, what is labor variance? First column SH into SR. It is the budgeted labor cost for actual output. Now everywhere the input output I wrote what? Actual output. Budget labor cost for actual output. Third is what? Variable overheads. So what is first column? SH into SR or AO into SR. That's the budgeted variable overhead for what? Actual output. So all the variance, the first column represents what cost? Yeah, standard cost. It is a flexible budget. Yes or no? Now the question is, take fixed overheads. For example, let's take this room rent as a fixed overheads. Okay. Now, this room, they had a budgeted capacity of 600 students. How many students here? 600 students. Okay. Budgeted capacity need not be full capacity. What they expect, only they call as what? Budgeted. There are 3 capacities here. Actual capacity, that is how many are actually attending. Number 2 is what? Budgeted. How much are expected to attend. And third is what? The full capacity. That means what? What is the maximum possible? Everybody follow in order. Now, in that case, suppose in the beginning of the year, the room rent was budgeted to be 4 lakhs. How much is here? 4 lakhs. and the budgeted output is 600 students. So the budgeted capacity, how many students here? 600 students, and the room rent is what? 4 lakhs. So 4 lakhs for 600 students. Respond, yes or no? Suppose actually 1200 students comes. How many students comes here? 1000 students comes. Yes or no? In that case, tell me, will the fixed overheads flexible budget change or will not change? Because for 1200 students budget also, the cost is what? Same 4 lakh, because it's not like a material labor variable overheads where the flexible budget amount what? Changes with the output, because for the flexible budget also, the cost is what? BFO only. Everybody following or not? Yes, sir. The point number 1, so now understand that there is a standard cost for material. There's a standard cost for labor. The standard cost for variable overheads. The word standard cost means what? Flexible budget cost. Okay. Budgeted material cost and flexible budgeted material cost are what? Different. Budgeted labor cost, flexible budget labor costs are what? Different. Budgeted variable overheads and flexible budget variable overheads are what? Different. But the original budget fixed cost and the flexible budget fixed cost both should be what? Same, because fixed cost will not change when I change the output. Any other? Yes or no? It will not change with what? Volume is the first thing we all know about fixed overheads. Yes or no? That means for fixed overheads there are only 2 costs. One is AFO, another is BFO. That's actually the rent which I paid, and the rent I paid for what? Budget. The budgeted rent is same for original budget as well as what? Revised budget. There's no 2 budgets for fixed overheads. Everybody is on, because the original budget rent is 4 lakhs. The flexible budget rent also will be what? 4 lakhs only. For all the other costs, I have 3 costs. The budgeted cost, the standard cost, which is revised budgeted cost, and third cost is what? Actuals. But for fixed overheads alone, I have only what? The budget and then actual. I don't have in between something else what? Flexible budget, because for flexible budget also, it is going to be same only. Everybody, yes or no? The point number 1 clarity irukka? Now see. But to our surprise, what has happened is, if you look at the columns, okay. I plan to produce how many units? Let us take the units here. If you look at the problem, look at the question. I plan to work how many hours? 8,000 hours. My planned speed is how many units per hour? And that is how many hours per unit? 10 hours per day. That means as per budget, I plan to produce how many units? 800 units. Accepted? I plan to produce 800 units, and my budgeted fixed cost, how much is here? 4,000. This is the third column, BFO, budgeted fixed cost. Respond, yes or no? So this is understandable. I targeted to produce 800 units by spending how much fixed cost? 4,000 rupees fixed cost. So this is my budgeted fixed expenditure, right or not? Yes, sir. Actually, I produced how many units? 850. By actually spending how much rupees? 3,600. This is actual fixed overheads. Second column, third column is budgeted expenditure, and then what? Actual expenditure. There's no problem at all, right or not? Yes, sir. But then what is column 1? Question arises, no? Because first column we normally call as standard cost. We call as what? Standard cost. When I plan to produce 800 units, my budget is how much? 4,000. But when I produce 850 units, the budget has been changed to what? 4,250. The treatment seems to be similar to variable overheads. Everybody, are you following or not? Sir, now only you said for 4,000 units budget also, so sorry, for 800 units budget also, the cost is what? 4,000. For 850 units budget also, the cost will be what? 4,000. There's nothing called a standard cost of fixed overheads. Respond, yes or no? In the case, the question is, sir, then what is this 4,250? Question arises now. For this only, we should go back to IPCC old memories. We studied a chapter called as overheads. Choice, huh? Okay, we studied a chapter called as what? Overheads. In that, let us understand first how the overheads are accounted in cost ledger accounting. Then we can come to this discussion and then take it forward. Can I proceed? Now, see. Fixed overheads are not unitized. Are not what? Unitized. Because it is not constant per unit. But what happens is, when I prepare a ledger accounts or accountants, what happens is, every unit when I produce, I should find out the cost of that unit, right? Why should I find out cost of every unit produced? Then only when the units are sold, it becomes what? Cost of goods sold. When the units are not sold, it becomes what? Closing stock. So I'm having a duty to find out cost of each and every unit produced for stock valuation purpose. Right or not?
Yes, sir.
Now, to produce this mouse, I incur some cost or not?
Yes, sir.
What are all the costs? Material, labor, variable overheads and fixed overheads. Right or not? Material cost can be unitized because it is a variable cost. Yes or no? Labor cost directly traceable. This is also what? Variable. And variable overheads also is what? Easily unitizable because it's also what? Moving with the units. They have naturally the cost drivers as what? Units. But fixed overhead is not incurred for every mouse. It is incurred for what? All the mouses commonly. It is not per unit. Respond. Yes or no?
Yes,
In that case, I have to unitize the fixed overheads now. How to do it is the issue. What the company does is, at the beginning of the year, they prepare a budget. They prepare what? Budget. In which they can budget their fixed expenses, right or not? Normally, budget and fixed expenses and actual are generally same because it's not difficult to budget what? A fixed cost. So they budget a fixed expense. For example, MT can at the beginning of this particular period budget the fixed expense or the room rent to be suppose 4 lakh rupees. Are you following? They not only budget the fixed cost, they also budget the volume. They also budget what? Volume. At the beginning of the year, they say, in this room, how many students are expected to join? Okay, suppose the capacity is 800 student capacity and they feel that for this particular attempt batch, for simplicity, they say 500 students are expected to join. How many are expected to join here? 500 students. Now tell me, the room rent is 4 lakhs and what is the expected number of students? 500. Tell me for every student, how much will I charge as room rent here? 4 lakhs divided by 500 gives how much rupees? 800 rupees. So, no. So this I call as predetermined rate. What rate here? Predetermined rate. In this chapter I call as standard rate. So, no. So I now say that when every student comes for admission, in his or her head, I'll be charging how much rupees? 800 rupees as a fixed cost. Right or not? When one by one students are taking admission, I will charge to them how much rupees? 800 rupees. Yes or not? Like that. When every unit I produce, when the actual output is produced, for each unit I charge how much rupees? 800 rupees for example. Are you fine or not? Now, at the end of the period, suppose instead of 500, I have produced 600. How many units? 600 units. In that case, 600 into 800, how much have been taken by these units? 4,80,000. Respond yes or no? Now, in that case, 4,80,000 has been charged to what? The production. What is taken by the production, I call as absorbed overheads. I call as what overheads here? Absorbed overheads. Ennappa right? So what happens is, fixed overheads, I charge to the production not on actual basis, but on what basis here? Absorbed basis. Using what rate? Predetermined rate. When every unit gets produced, to the unit, I charge how much fixed cost? Standard fixed cost or budgeted output. At the end of the year, I have produced how many units? Actual output, and they would have taken how much rupees? Yeah, standard rate. In this problem, when every unit gets produced, I charge every unit how much rupees? Fixed cost? 5 rupees. How many has been produced here? 850 units produced. So to the cost of production, in the cost sheet, I would have charged how much rupees? 4,250. This is a fixed overhead charge to my cost of production cost sheet. Everybody yes or no? This is what we call as what overheads here? Absorbed overheads. Everybody following? Huh? Yes, this is followed in the system called as absorption costing system. Answer the question once again. What is the cost of this mouse? Material, labor, variable and fixed overheads. Why should I know the cost of this mouse? Then only when the mouse is sold, it becomes what? Cost of goods sold. Not sold becomes what? Closing stock. So, to know the profit, to find out the stock value, necessarily I should charge fixed cost to the mouse. Even though I don't like to unitize it, but I'm forced to unitize it. So no, I don't like to unitize it, but I'm forced to what? Unitize it because only when I unitize, I can charge it to unit. Yes or no? Now, I unitize and charge at the end of the era, beginning of the era. Because you may say, sir, why can't I charge actual? I'll know the actual only at the end of the year, right or not? Till that time, I cannot wait for my what? Stock valuation. So what I do is, in the beginning of the itself, I calculate a budgeted rate. How many units is likely to be produced? How much is that likely to be spent amount? We calculate a budgeted rate. When actual output is produced, these units are going to be charged what rate? Budgeted rate. At the end of the year, I have produced how many units? 850. These 850 would have taken into themselves how much rupees cost? 5 rupees cost per unit. So the overhead charge to the production is going to be how much rupees? 4,250. The overhead charge we call as what? Overhead absorbed. This only goes to a cost sheet as what? The overheads after the prime cost. Everybody, are you following or not? In the issue, now next. That means there are 3 overheads. Column 1, column 2, column 3. Column 1 is called as absorbed overheads. What is column 1 is called as what? Absorbed overheads. Column 2 is called as actual overheads. And column 3 is called as what? Budgeted overheads. In other words, budgeted overheads is overheads planned. Actual overheads is what? Overheads spent. Absorbed is overheads accounted. 3 things, yeah. Here I am not saying flexible budget, I am just saying what? It is absorption. Okay. So column 3 BFO is what? Overheads planned. Column 2 AFO is what? Overheads incurred. Column 1 is what? Overhead absorbed. Planned, incurred, accounted are the 3 columns. Respond yes or no? In that case, column 1 is absorbed and column 2 is what? Actual. In my cost sheet, I have written how much I fixed overheads? 4,250. In cost, I will be debiting the WAP account. In cost, I will be writing in what? The after prime cost. But I have debited my cost ledger accounts. How much fixed overheads? 4,250. I have actually spent only how much here? 3,600. I have over accounted, under accounted, over accounted. This is called as over absorption. It's called as what? Over absorption. Here 1 minus 2 is nothing but absorbed overheads minus actual overheads. For fixed overhead variance, 1 minus 2 should be called as what? Under absorption or over absorption. Favorable variance means over absorption and adverse means what? Under absorption. This over debit or over credit is what we call as a fixed overhead variance. Are you following what I am saying? Now tell me, FO cost variance 1 minus 2 is what? Over or under absorption. Favorable 1 minus 2 is what? Over absorption. Adverse 1 minus 2 is what? Under absorption. Tell me what is column 1? Absorbed overheads. What is column 2? Actual overheads. What is column 3? Budget overheads. Up to this, I have the clarity or not? Now, let me just take the discussion further in the sheet. Okay, see. The question is, why sir we are over or under absorbing? Why can't I absorb correctly? Question arises no. Correct? Now, I'll just elaborate discussion here. I'm going to go for the variance one by one. Okay. We first seen that cost variance is over or under absorption. Accepted? Yes, next issue is why sir there is an over or under absorption? Why the absorption does not take place correctly? Question arises no. Reason is very simple. I charge my actual output not at actual rate but at the standard rate. Had I charged to the every mouse produced at the actual rate, there will be no over or what? Under absorption. To every unit produced, I charge using what rate? Standard rate. Due to use of predetermined instead of what? Actual rate, under over absorption arises. Yes or no? Don't ask the question, why should I use predetermined? I already explained. I can use predetermined because that only you know at the beginning of the year. Actual known only at the end of the year. Till then I cannot wait for my product costing. Respond, are you following? So tell me the simple reason is why over or under absorption arises because of charging using standard rate and not using actual rate. To put it simply in numerical terms, column 1 is AO into SR. Column 2 is AO into AR. Can I stay like that or not? Column 1 is what? AO into SR. Column 2 is what? AO into AR. Column 1 and 2, AO same. What difference here? SR and AR are different. So no, instead of charging using the actual rate, I am charging using what? Budgeted rate. SR and AR difference only causes what? Under or over absorption. Respond, yes or no? Let's proceed further. Now, tell me, what is standard rate? Budgeted fixed overheads divided by budgeted output. It is fixed or budget. What is actual rate? Actual fixed overheads divided by actual output. So, standard rate and actual rate are different because of numerator or because of denominator. Why SR is different than AR? Because SR is BFO by BO and AR is what? AFO by AO. The standard rate is different than actual rate because the numerator is different or denominator is different or both are different. It can happen, yeah? AR and SR can change. Why? Because of numerator difference or because of denominator difference or what? Both. Now, the numerator difference is BFO and what? AFO, which I call as expenditure variance. Yes or no? What expenditure variance? 3 minus 2. BFO minus AFO. I plan to spend 4,000. I paid only how much? 3,600 rent. So the 400 is what? Rent savings. This is called as what variance? Expenditure variance. The numerator difference for the under over absorption is called as what variance? Expenditure variance. Yes or no? Now, the denominator difference is called as what? Volume variance. I plan to produce BO, I produce what? AO. The denominator difference is called as what variance here? Volume variance. Very simple. Tell me, what is my budgeted output? Solliya, Tungariya, what is budgeted output? 800 units. What is the actual output? How much the extras produce? Okay. When I produce 50 units extra, I absorb 5 rupees extra for the 50. More I produce, more I absorb, more the over absorption. Less I produce, less I absorb, under absorption. Now, when I keep on producing more, I also absorb what? More. The over absorption arises due to what? The volume increase. Yes or no? In that case, the increase in 50 units leads to a over absorption of, for every unit, how much I charge? 5 rupees. It absorb how much here? 250 is going to be what? Favorable volume variance. Point number 2. Are you following or not? Now, the question is, what is 1 minus 2? What 1 minus 2? Absorbed overheads minus actual overheads. It is how much rupees here? 650 rupees. It is called as what? Over absorption. 1 minus 2 is over or under absorption. I have an over absorption. Question is, sir, why over absorption or under absorption arises? Because I use standard rate and not what? Actual rate for charging to my output. Why is standard rate and actual rate different? Because standard rate is BFO by BO comes from budget. Actual rate is what? AFO by AO comes from what? Actual. So the difference may be due to numerator BFO and AFO, which I call as what? Expenditure variance, or BO and AO I call as what? Volume variance. When volume increases, I absorb more. When the volume decreases, I absorb less. So under over absorption also arises due to what? The volume of production is called as what variance? Volume variance. There is one way of understanding the volume variance. Everybody yes or no? Yes. Now the question arises, sir, why I am producing 50 units extra? That question arises, no? Yes, volume has increased. Volume has what? Increased. I plan to produce 800. I produce what? 850. Volume has increased now. Why the volume has increased? It may be due to 3 reasons. Calendar, capacity, efficiency. Before going for the number, let's simply understand that. Now, see, in a month, suppose I plan to complete 5 chapters. For example, I plan to complete how many chapters? 5 chapters. But I completed 7 chapters. Thank you very much. Okay, at least you can imagine. Yeah, okay, think big. Can I say it now? In that case, there's a favorable volume variance or not? No question. How Sarah has completed 7 chapters, 2 chapters extra? Question is no. There will be 3 reasons. 8 here. Number 1 is calendar. Instead of having 20 classes per month, I conducted 23 days. Since I'm working 20 days per month, I work for 22 days. When I work more number of days and complete more portions. So no. So the output can increase or decrease due to number of days I'm working. It's called as what? Calendar. Right or not? Next. I am working number of days more. Just because I am working number of days more, it does not mean I should produce more units. I call for 2 extra classes. I call you for what? 2 extra classes. I am having what? 6 hours. Yes or no? In the 6 hours, I come late by 4 hours. I come late how many hours? 4 hours. 2 hours only is happening now. So, not only how many days I am working important, how many hours I am working in what? Day also is very important for the output. Yes or no? This is called as what? Capacity. Are you following not? So, the output is influenced by calendar, how many days I am working. It also depends on what? How many hours I am working in the planned day. Yes or no? So, one is calendar and second is what? Capacity. Now, I am keeping 10 extra classes and I am working throughout the day. In that, okay, I call for extra class for 8 hours. 8 hour day I am working. Yes or no? Calendar also use. Capacity also is what? Use. I do only one sum. I do only what? One sum. I'm keep on discussing again and again. You also don't understand. I also don't do it. Okay. In that case, calendar use, capacity use, what happened? Efficiency gone. Yes or no? That means my output depends on 3. How many days I'm working? How many hours I am working that day, how fast I am working, all the three influences what? Volume. These are the causal factors for the volume variance. Are you following now? Any clarity now? So that is what you want to calculate. Now the volume variance is branched into calendar, capacity, and then what? Efficiency. Let me discuss that before we wind up this particular problem. Can I proceed? Now, see here. Okay. He is silently moving out. Okay. Why you are catching him? Can I proceed now? Don't touch. Calendar, capacity, efficiency. Please. Okay. Now, budgeted hours, I plan to work how many hours? 8,000 hours. Everybody listen. I am going to put into numbers. I plan to work how many hours? 8,000 hours. Because I plan to work 20 days. Kadapa. Right or not? My original budget is how many days? 20 days. I plan to work how many hours? 8,000. Now, I have come to the office or factory for 22 days. 22 days. The factory is working how many days? 22 days. In that case, the possible hour that could have been worked is 8,000 into 22 by 20. Yes or no? You got how many hours here? 8,800 hours. How I got it? 8,000 hours into what? 22 by 20. In a 20 days budgeted period, I plan to work how many hours? 8,000 hours. Since I worked how many days? 22 days. I should have worked how many hours here? 8,800. In that case, due to the extra calendar, how many hours are increased? 8 hours has increased. So no, every 10 hour 1 unit. Standard. Every 10 hours what? 1 unit. So due to calendar, the output increase how many units here? 80 units. That means by working 22 days instead of what? 20 days, I should have produced how many units extra? 8 units. But I produced only how many units extra? 50. Something other thing have happened. Yes or no? Tell me. I plan to work how many hours? 8,000. Why? I plan to work only for 20 days. Since the actual days work is how many days? 22 days. The possible hour I could have worked is how many hours? 8,800. Had I worked the possible hours, I should have worked how many hours extra? 800 hours. At 10 units per hour, I should produce how many units here? 80 units extra is what we call as a calendar. Yes or no? It is an extra not every unit into how much rupees? 5 rupees. That is how much rupees here? 400 favorable over absorption. Point number 1. Accept or not? Now, come to point number 2, capacity. Now, possibly, I could have worked for how many hours? 8,800 hours. Look at the workbook and tell me, actually, I worked for how many hours? 8,600 hours. I could have worked for 8,800 hours. I work only for how many hours? 8,600. Overutilization, underutilization. How much underutilized here? So that is going to be a capacity drop of how many hours here? 200 hours. When 200 hours drop, the volume drop is how many units here? 20 units. Yes or no? This is the adverse volume drop. So with a volume drop, I underabsorb how much rupees? 5 rupees. How much rupees here? 100 adverse. Is what variance? Capacity variance. Respond yes or no? Come to the third part. That is called as what? Efficiency. Now, actually, I have worked how many hours? 8,600 hours. Now, how many units I produce? 850 units. Every unit, how many hours allowed? 10 hours. That means the time allowed is how many hours? 8,500. See, I am allowed to spend 8,500 for this 850 units. I spend how many hours? 8,600. I overconsume, underconsumed, overconsume. Efficient, inefficient. Due to inefficiency, I lost how many hours here? 100 hours. So, I lost how many units here? 10 units. Yes or no? Into how much will be? Is 5. That's going to be how much it is going to be? 50 adverse. Is going to be what variance? Efficiency variance. Very simple. Due to calendar, I gained 80 units. But due to capacity underutilization, I lost how many units? 20. Still I should have produced how many units extra? 60. I produced only 50 because I inefficient by how many units here? 10 units. So the volume increase of 50 units is due to calendar 80 increase, due to capacity 20 decrease, due to efficiency what? 10 decrease. The overall increase how many units here? 50 units. Into 5 gives over absorption due to what variance? Volume variance is the meaning of fixed order variance calculation. Everybody following on. Now, there are more aspects to it. We will be discussing in the later stage of this chapter. When you go for bigger problems or advanced problems. With this, we complete the discussion on fixed overhead variance. Don't think I am not giving notes. In the workbook itself, in the end of this chapter, whatever I discussed now has been given as what printed notes. Okay. Yeah, number, okay. You can go on. Okay, go over there and check. Okay. Okay. For confirmation, 168 page. Page number 168. I given notes for fixed overhead variance. Question number 7. Whatever I spoke now, you need not worry. Whatever I spoke now, exactly has been given as what notes, including the latest calculation. I wanted to save some time. Hence, has been given as what note. For that alone, I will not be dictating notes. Notes are in the workbook itself. With this, we have completed all the cost variances calculation. Yes or no? Okay. Now, all of you are listening, huh? Let us see how you listen. Okay, tell me first. First column, AO into SR. Second column, AFO. Third columm, BFO. What is first column? Absorbed overhead. Second column, actual overhead. Third column, budgeted overhead. 1 minus 2, absorbed minus actual. I call as what? Under or over absorption. Favorable means over absorption. Adverse means under absorption. Why under or over absorption arises? Because I charge the product at the standard rate and not using the actual rate. Since I use standard instead of what? Actual rate, under or over absorption arises. Next point. Understood or not? Now, third point. Why standard rate is different than actual rate? Standard rate is BFO by BO. Actual rate is what? AFO by AO. The difference is maybe due to numerator or maybe due to denominator, maybe due to both. The numerator difference we call as what? Expenditure variance. BFO and AFO. The numerator is called as what? Volume variance. BO and AO. Why the volume variance affects under over absorption? More I produce, I absorb more. Less I produce, I absorb less. Why the volume variance? Volume may vary because of number of days I am working, number of hours I am working in the planned days, and also the speed of the output. It happens due to calendar, capacity and efficiency. This is in the nutshell what has been discussed in the fixed overhead variances. Response yes or no. We will do quickly few more problems in the fixed overhead variances before you go for a comprehensivism where all variances are calculated and reconciliation going to be made. Can you go to the next sum or not? No. Now, it is for you to pick up the momentum and tell me the answers quickly. Okay. Now, take the next question. Question number 8, please. Now the time is 7:45. Before 7:55, we should complete question number 8. Can I start or not? Now. Okay. 10 minutes starts from now. Can I start or not? First. From the following figures or the books of a company, compute the appropriate variances. Please. First column is budget, second column is actual. Output, budget 12,000, actual 13,000. This is BO, that is AO. Hours 6,000, 6,700 BH and AH. Budget fixed overhead is 2,400 BFO and AFO is 2,500. BVO 12,000, AVO 13,300. Number of days 50 and then 54. Can we start or not? Write down first. You have to calculate first variable overhead variance and the next what? Fixed overhead variance. Start with the first part 1. Please do it together. Let's do it quickly. Part 1. Variable overhead variances. Part 1, variable overhead variances. Variable overhead variances. Okay. Step 1. What is step 1? Standard rates. Step 1. Standard rates. Okay. SR per unit is equal to SR per unit is equal to formula BVO by BO. SR per unit is equal to BVO divided by BO. Tell me, what is budgeted variable overheads? How much base is 12,000 divided by 12,000. 12,000 rupees divided by 12,000 units is equal to how much per unit? 1 per unit. SR per hour is equal to SR per hour is equal to BVO by BH. SR per hour is equal to BVO by BH. Oh, correct. 12,000. What's happening? Can I say 12,000 divided by 6,000? BVO by BH. 12,000 divided by 6,000. How much per hour here? 2 per hour. Now, time wasted. Please proceed further. Adverse variance. Okay. It's going to 2 per hour. Please. Settle down. Can I proceed? Now. So please don't tell answers. I will tell myself. Okay. Okay. Now, step 2. Computation table. Computation table. Computation table. 3 columns. Column 1, 2 and 3. Column 1, 2 and 3. First column, SH into SR or AO into SR. Please fast. SH into SR or AO into SR. Column 2, AVO. Column 3, AH into SR or SO into SR. AH into SR or SO into SR. We are lazy, na? Tell me what is SH given, AO given. Tell me what is actual output. What is actual output here? 13,000 units into SR is what? 1. 13,000 units into 1. Workbook. What is the actual variable overheads incurred? 13,300. 13,300. AH given or SO given? AH. What the actual hours work? 6,600 into SR is 2. 6,600 into 2. First column is 13,000. Second column 13,300. Third column 13,200. 13,000, 13,300, 13,200. Next. Step 3. Variance calculation. Please. Step 3. Variance calculation. Center right. Variable overhead cost variance. In the center right. Variable overhead cost variance. 1 minus 2. Variable overheads cost variance 1 minus 2. What is 1 minus 2? 300 adverse. 1 minus 2, 300 adverse. Branch it into 2. Branch it into 2. Variable overhead expenditure variance. Variable overhead expenditure variance. It is what? 3 minus 2. Variable overhead expenditure variance 3 minus 2. The number is 100 adverse. 100 adverse. Variable overhead efficiency variance 1 minus 3. VO efficiency variance 1 minus 3. How many it is? 200 adverse. 100 adverse and 200 adverse. Part 2. Fixed overhead variances. Please. Part 2. Fixed overhead variances. Step 1. Standard rates. Step 1. Fixed overhead variance. Step 1. Standard rate. I heard you. Okay, let's proceed. Now, don't make me like a parliament speaker here, please. Step 1, standard rates. Underline that. SR per unit is equal to, please. SR per unit is equal to BFO by BO. SR per unit is equal to BFO by BO, which is equal to 2,400 divided by 12,000. 2,400 divided by 12,000. It is 0.2 per unit. Is equal to 0.2 per unit. SR per hour is equal to SR per hour is equal to BFO by BH. SR per hour is equal to BFO by BH. 2,400 divided by 6,000. 2400 divided by 6000 is equal to 0.4 per hour. 0.4 per hour. Step 2, computation table. Step 2, computation table. How many columns? 5 columns. Column 1, 2, 3, 4 and 5. 5 columns. First column, SH into SR or AO into SR. SH into SR or AO into SR. Second column, please tell me AFO. Second column, AFO. Third column is BFO. Third column is BFO. It is straight away given. Fourth column is AH into SR or SO into SR. Fourth column, AH into SR or SO into SR. Last column is what? PFO. In bracket, right? PFO. What is PFO? BFO into AD by BD. PFO is BFO into AD by BD. First, SH given, AO given, AO. Please, all of you involve and write. What is actual output? 13,000 units. Into how much, say, rupees? 0.2. 13,000 units into 0.2. AFO, what are the actual fixed overheads incurred? 2,500. BFO, what is budgeted fixed overheads? 2,400. AH given or SO given? AH. What is AH? 6,600 into SR is 0.4. 6,600 into 0.4. PFO is BFO into AD by BD. Yes or no? It is 2,400 into 54 by 50. 2,400 into 54 by 50. Now, first column is how much? 2,600. Second column total 2,500. Third column 2,400. Fourth column is 6,600 into 0.4 gives you 2,640. 2,640. Last column is 2,592. 2,400 into 54 by 50 gives you 2,592. Can I proceed or not? Next. Step 2 or step 3? Step 3. Variance calculation. Step 3. Variance calculation. Fixed overhead cost variance. Please. Variance calculation. Fixed overhead cost variance 1 minus 2. Fixed overhead cost variance 1 minus 2. Tell me what is 1 minus 2 number? 100 favorable. 1 minus 2, 100 favorable. You look at the notebook and tell me the numbers. Branch it into 2. What are 2 branches? FO expenditure variance, FO volume variance. FO expenditure variance and FO volume variance. Expenditure variance is 3 minus 2. Tell me what is 3 minus 2 number? Please tell me 100 adverse. Expenditure variance 3 minus 2, 100 adverse. Volume is 1 minus 3. What is 1 minus 3? 200 favorable. Volume 1 minus 3, 200 favorable. Branch volume into 3. Please branch volume into 3. FO capacity variance, FO calendar variance, FO efficiency variance. Branch it into 3. FO capacity variance, FO calendar variance, FO efficiency variance. Capacity variance is, please tell me, 4 minus 5. Capacity variance is 4 minus 5. What is 4 minus 5? 48 favorable. 48 favorable. FO calendar variance is 5 minus 3. What is 5 minus 3? 192 favorable. 192 favorable. Efficiency is 1 minus 4. I think it is 40 adverse. It is 40 adverse. Just to consolidate, we did a sum where the variable and fixed overhead variance has ought to be calculated without any problem. We can calculate it using the formats. Everybody, are you following or not? So, 3 minutes adverse. It is all due to your disturbance. Can I say? No. Now, understand that like this, so many 3 minutes you have lost till now. In controlling you, so many 3 minutes has been what? Lost. Had I saved that, would have been at least 2 concepts ahead. Now, please. Let's go to the next issue. See. Now, sometimes in the problem, days will not be given. Days may not be given. We have seen no last problem 22 days actual, 20 days budgeted. This problem 50 days and 54 and so on. It is not. Now, if the days are not given in the question, listen here. If the days are not given in the question, following changes occurs in the fixed overhead variance calculations. Change number 1. I have only 4 columns. I will not be having the column number 5 PFO. Change number 1. So not there. So how many columns will be there? 4 columns. Now days not there means BFO into AD by BD not possible. We will not be having 5th column. PFO will vanish. Point number 1. Accept or not? Now. When there are no days, there will be no calendar variance. There will be no what? Calendar variance. The variance 5 minus 3 will be not there. What happens to that? It merges with what? Capacity variance. When 5 minus 3 goes into 4 minus 5, what gets cancelled? 5 and 5 gets cancelled. What is capacity variance? 4 minus 3. These are all the changes when the problem does not give you days. Tell me the changes. Number 1. No days given. How many columns in the table? 4 columns. What column will not be there? PFO. Second issue. No days are not there means what variance will not be there? Calendar variance. What happens to calendar variance? Goes into capacity variance. So the capacity variance now become from 4 minus 5 to what? 4 minus 3. Are the small changes. Everybody yes or no? That is, I won't be able to give more detail about why the capacity has changed. Due to calendar or working, I cannot say. That is what we call as the variances without the number of days being given. Can we start with the next problem or not? Take question number 9. Take question number 9. With this problem, we will complete all the overhead variance problems. Then we can just go for the consolidated sums. Okay, please. Calculate fixed production overhead variances in as much detail as possible in the following situation. Please. Budgeted fixed overheads 2,46,000. Actual fixed overheads is 2,59,000. Direct labor budgeted 1,23,000 hours. Actually is 1,41,000 hours. Budgeted output is 6,15,000 units. Actual output they given you C below. Okay. Next. Company operates a process costing system. At the beginning of the period, 42,000 half completed units were in stock. During the period, 6,80,000 units were completed and 50,000 half completed units remained in stock at the end of the period. Okay. Now, these are all the details given. Number 1. First question is days given or not given? That means we will be having how many columns here? We will have only how many columns? 4 columns. Okay. Number 2. Actual output should be computed in this sum using statement of equivalent units. We are done in process costing IPCC or not? You have to say do using the statement of equivalent units. Now, let us do that first and then go for the variance calculation as a routine thing after I complete the first statement. Can we start or not? Now. Okay. This step alone I will do, then you can copy, then remainder will be doing it together. Okay, please. Okay. I plan to produce 6,15,000 units. And I have produced actually how many units? They given a detailed paragraph here. Are you following up? No. My first question is, cost will be incurred for completed units, incomplete units or both? When I say production, the resource consumption is not only for the finished unit, it is also for what? Unfinished unit. That's what is or no? The problem is, if a finished unit can consume 1 kg of a resource, the unfinished 60% complete will consume same 1 kg or less than 1 kg, less than 1 kg, with 60% of that. Yes or no? That means I can say what the complete units consume and incomplete consume will not be what? Same. So how to make it same? Convert into what? Equivalent units and then do it. It's a normal thing which I learned in IPCC. I think I need not elaborate further on that. Right or not? Now. See how it is going to be calculated. All of you participate. Okay. Okay. First, this year I have produced how many completed units? Answer, how many units? 6,80,000. I have produced how many completed units? 6,80,000. In the 6,80,000, there are 2 varieties. Opening work in progress, continued and completed this year. This year itself started, this year itself completed. Two items are there or not? Respond, yes or no? Now, I have completed 6,80,000 units this year. I do not. Now the question is, all units started this year, completed this year? Some units were started last year, it was continued in this year and completed, yes or no? And some units are what? Started and completed. Respond, yes or no? In that case, out of 6,80,000 units completed, what is opening WAP completed? How many units it is? 42,000 units. Then balance 680 minus what? 42,000 units. How many introduction completed? 6,38,000 units. That's all. Minimum production? Yes. Apart from 680,000 complete units, I also produce what? 50,000 incomplete units. This is a current year production. Yes or no? In the current period, I produce two categories of output. Completed output, incomplete output. I produce 6,80,000 completed output and then 50,000 incomplete output. The 6,80,000 completed output, everything produced this year? No. Out of this, 40,000 started last year and completed this year. And balance 6,38,000 started this year, completed this year. Listening, huh? And balance 50,000 started what? This year and did not complete. It is going to be completed in what? Next year. Everybody following or not? Now, tell me. Opening WAP completed, entire cost spent this year, partly last year. Last year 50% completed. This year what? Balance 50% completed. So the equivalent is going to be how much? 50,000 into 42,000. Yes or no? Now, this year started, this year completed. How much percent work done? 100% work done. This year started, only half completed. How much percent work done here? 50%. Everybody respond, yes or no? In other words, even though this 42,000 units were completed, I did not do the entire work this year. Last year 50% work done, and this is only what? Balance 50%. This started this year, ended this year. 100% work done. Started this year, not yet completed. 50% work done. Are you following or not? Now, that means 42,000 units, 50% complete is as good as 21,000 units, 100% complete. Yes or no? 6,38,000 units, 100% complete is what? 6,38,000 units, 100% complete. 50,000 units, 50% complete is what? 25,000 units, 100% complete. If I total the AO of this bit, how many units here? 6,84,000. In the first column, AO and SR, AO has been calculated. Respond, yes or no? I found out the actual equivalent output. When I say actual output, I always mean what? Actual equivalent output, because WAP in computer cannot be added as it is. Copy this first before I proceed. Write down. Computation of the actual output. I think it is question number 9. Question number 9. Computation of actual output. Computation of actual output using statement of equivalent units. Computation of actual output using statement of equivalent units. Using statement of equivalent units. Please copy the slide quickly. Finished, huh? Over. Those not copy, raise your hand. Those who have not copied, okay, please, fast. Can I proceed? Write down. Step 1. Calculation of standard rate. Routine calculation. Let's start with the calculations. Calculation of standard rate. Calculation of standard rate. SR per unit is equal to step 1 calculation of standard rate, right? SR per unit is equal to formula BFO by BO. SR per unit is equal to BFO by BO. What the budget fixed overhead? 2,40,000 divided by 6,15,000. 2,46,000 divided by 6,15,000. 2,46,000 divided by 6,15,000. Tell me what is the number here? Tell me quickly. Instead of saying good night, tell me the answer. Yeah, what is the answer? 0.40. 2,46,000 divided by 6,15,000 gives you 0.40. SR per hour is equal to BFO by BH. SR per hour is equal to BFO by BH, which is equal to 2,46,000 divided by 1,23,000. 2,46,000 divided by 1,23,000 is equal to 2 per hour. Please, 2 per hour. Next, step 2, computation table. Step 2, computation table. Answer me, 4 columns or 5 columns? Why not 5 columns? No days are given. So open the 4 columns. Column 1, SH into SR or AO into SR. SH into SR or AO into SR. Column 2, AFO. Column 3, BFO. Column 4, AH into SR or SO into SR. AH into SR or SO into SR. Okay. Tell me. Actual output is just now calculate the first statement. Yes or no? What the actual output? 6,84,000 units into 0.4. 6,84,000 units into 0.4. What the actual fixed overheads given? 2,59,000. 2,59,000. Budgeted fixed overheads is 2,46,000. 2,46,000. AH, what the actual hours that has been worked? 1,41,000 into 2. 1,41,000 into 2. 6,84,000 into 0.4, 2,73,600. 2,73,600. Second column 2,59,000. 2,59,000. 2,46,000. Then 2,82,000. 2,46,000. 2,82,000. Can I proceed or not? Next, step 3, variance calculation. Step 3, variance calculation. Variance calculation. Center, fixed overhead, cost variance. Fixed overhead, cost variance, 1 minus 2. Fixed overhead, cost variance, 1 minus 2. Look at the notebook, subtract and tell me what is the number? 14,600 favorable. Fixed overhead cost variance 14,600 favorable. Branch it into 2. Fixed overhead expenditure variance. Fixed overhead expenditure variance. What is the formula? 3 minus 2. What is column 3 minus column 2 number? 13,000 adverse. Expenditure variance 3 minus 2, 13,000 adverse. Fixed overhead volume variance. Second branch fixed overhead volume variance 1 minus 3. Volume variance 1 minus 3. I think it is 27,600 favorable. 27,600 favorable. Volume branch it into 2. Please volume branch into 2. First branch is what? Fixed overhead capacity variance. It is 4 minus 3. Fixed overhead capacity variance 4 minus 3. 36,000 favorable. Fixed overhead efficiency variance 1 minus 4. Fixed overhead efficiency variance 1 minus 4. It is 8,400 adverse. 8,400 adverse. With this we have completed material, labor, variable as well as what? Fixed overhead variances. All cost variance calculations are completed. Okay. Now Okay. Take question number 10. Take question number 10. Mark it as important. A past RTP question. It gives you a big picture about how cost variances are calculated. Overall, you will be obtained. One or two interesting calculations also involved. Take question number 10, please. Okay. ABC Limited, please. We will not be able to complete the sum. We'll try to calculate as many variances as possible in today's class. We'll continue and do the reconciliation in the next class. Please. ABC Limited uses flexible budgets and standard costing for its single product PCM30 produced at its factory at Solan. The following details relate to a particular month's actual and also provides brief details of standards established. Standard quantity required for producing 1 unit of PCM30, 3 kgs. Standard cost 4.4 rupees per kg. Actual material purchase and use rupees 3,36,000. Actual price paid 4.2 per kg. Standard time to produce 1 unit 30 minutes or half an hour. Standard wage rate 5 rupees per hour. Actual wage rate 5.4 per hour. Sufficient direct labor time equivalent for producing 28,000 units are utilized, but the actual production in the relevant month was only 25,000 units. The company has a normal operating capacity of 15,000 hours per month, and the flexible budgets are 12,500 hours, 14,000 hours, 15,000 hours. The variable and fixed overhead budget has been given. The variable overhead budget changes. If you see 1,50,000, 1,68,000, 1,80,000, fixed overhead budget does not change because when the output changes, fixed cost remains what? Same. Actual fixed overheads incurred did not deviate from the budgeted amount. That means AFO is equal to BFO. However, the variable overheads incurred amounted to 1,60,000 in the concerned month. You are required to calculate the appropriate variances, material, labor and overheads. Show the variances in a statement suitable for presentation to the management, reconciling the standard cost with the actual cost of production. That's a question which has been given. Just few minutes time I'll give you, go through the question before you start with the solution. Mainly I want you to go through sufficient direct labor hours. That second paragraph, 2 lines given or not, that line alone, read it and tell me what you understood when you start with the discussion. Okay, go through the question quickly. Shall we start our? Okay. Now, before we start calculating variances, let us have some numbers in hand so that no confusion will come when we just go for the variance calculation. See. Okay. I want you to tell me the 6 numbers. Budgeted output, budgeted hours, standard output, standard hours, actual output, actual hours. You know these 3 items exist or not? BO, BH, SO, SH, AO, AH. All this we use in one place or another in our calculations. Everybody following up? Now, let me read it and then start our discussion. Standard input output ratio is 1 unit half an hour. Yes or no? See, the budget says to produce 1 unit, allowed to take how many hours? Half an hour, 30 minutes. Right or not? No. See, sufficient direct labor time equivalent for producing 28,000 units were utilized. But the actual production was how many units? 25,000 units. What they say is, I have worked how many hours? I asked a question. I have worked how many hours? The answer they gave me is, I have worked so many hours in which I could have produced 28,000 units. Sentence. So question is, how many hours were utilized? How many hours are what? Work. So many hours were work in which I could have produced, how many units? 28,000 units. Tell me, what is 28,000 units? Standard output. Please tell me, yes or no? But in that actual hours, which is capable of producing how many units? 28,000 units. I produce only how many units? 25,000. Now 25,000 is what? Actual output. They given standard output and then what? Actual output. Ennappa respond, yes or no? And the normal capacity is how many hours here? 15,000 hours. The word normal na budgeted because we don't budget abnormally. No. There's always a difference between normal capacity and full capacity. This room may have a 800 student capacity. Example. Okay. Normally 600 student admission comes means the normal capacity is what? 600. Suppose normally 800 comes means what? Full capacity can become what? Normal capacity. The word normal capacity be always understood to be what? Budgeted capacity because I budget normally. Right or not? I don't budget abnormally. Everybody follow what I am saying? So normally I plan to work how many hours? 15,000 hours. So the 15,000 hours is called as what hours here? Budgeted hours. Ennappa, right or not? That means, please let us fill up the blanks. You need not copy whatever we know and go for the next stage. Tell me, I know standard output. Yes, answer, how many units? 28,000 units. I know actual output. Yes, how many units? 25,000 units. I know the budgeted hours. Yes, how many hours? 15,000 hours. Other things I have to find out. Ennappa, respond, yes or no? Now, next. Working note number 1. Okay. I am going to find out actual hours. I want to find out what hours here? Actual hours. What is standard output? Standard output for actual hours. Now, input, output. Please help me out. 1 unit, how many hours allowed? 0.5 hours means what? Half an hour. Exactly. Now, what is standard output? 28,000 units. I work so many hours to put how many units? 28,000. Tell me what should be the hours? 14,000 hours. This what hours? That is, I have worked 14,000 hours. How many hours here? 14,000 hours in which I should have produced how many units here? 28,000. So the actual how many hours here? 14,000 hours. Everybody respond. Are you following or not? Now, I'll write here against actual hours. How many hours here? 14,000 hours. Next. Am I right or not? Now, standard hours. That is working note number 2. Can I write it here or not? Next is what? Standard hours. What is standard hours? Standard hours for actual output. Same input output ratio. 1 unit. How many hours? Half an hour. I have actually produced how many units? 25,000 units. How many hours allowed here? 12,500 hours. This cycle has what hours? Standard hours. 12,500 hours is what? Standard hours. Very simple. I have worked how many hours? 14,000 hours and produced 12,500 hours of output. Yes, I'm efficient or inefficient? Inefficient. In other words, I produce how many units? I produced 25,000 units, for which I should have taken how many hours? 12,500. I have taken how many hours? Actually 14,000. I am inefficient, seeing from hours angle. Yes, other way to understand is, I have worked how many units? How many hours? 14,000. In this 14,000 hours, I should have produced 28,000. I have produced only how much? 25,000. I am once again inefficient. Respond yes or no. The efficiency and inefficiency can be compared by comparing hours or what? Units. Standard and actual. That part, are you following or not? No. Budget is very simple here. In 15,000 hours, how many units? 30,000 units. In a half an hour unit or not? No. Very simple. Answer my question. I plan to produce how many units? 30,000. By working how many hours? 15,000. But I work only how many hours? In which I should have produced 20. I produced only how much? 25,000. Everybody, yes or no? I plan to produce 30, but I produce what? 25. Because I work for what? Less number of hours. In which also I should produce how many units here? 28,000. Is what is the input-output analysis. Everybody following or not? More about these numbers you will see when you go for the variances in fixed overheads. Enna write or not? Write down first. Analyzing the volume and hours. Analyzing the volume and hours. I did this because I don't want you to get confused during variance calculation. Since we have it set right now, then we can blindly follow the format in calculating the variances. Okay. Here heading, some heading. Analyzing the volume and hours. That's all. Volume na output. Hours means what? Hours. Okay, analyzing volume and hours. Okay, please copy this quickly. Should I dictate? No, sir. Finish copying, huh? Sadi banada. Please copy fast. Okay. Finish copying or not? Okay. Now, just for understanding's sake, I plan to work how many hours? I worked how many hours? 14,000. 1,000 hours was lost due to capacity underutilization. Right or not? That means how many units were lost? 2,000 units. So from 30,000 to 28,000, the volume drop is due to what? Capacity. Ennappa, right or not? No. Next, in 14,000 hours, I did only how many hours job? 12,500 hours job. I lost how many hours? 1,500 hours due to what? Efficiency. 1,500 hours lost. How many units lost? 3,000 units. From 25 to 20, 28 to 25, the drop in volume is due to what? Efficiency. Very simple. My planned volume is 30,000. My actual output is only how much? 25,000. 5,000 volume drop. Yes or no? Why 5,000 volume drop? Because the 2,000 has dropped due to capacity underutilization. Instead of working 15,000, I work only how many hours? 14,000. 1,000 hours capacity underutilized. 2,000 units gone. So no. Still, I should have produced 28,000 or not. Why I produced 25,000? Because in 14,000 hours, I did only how many hours job? 12,500 hours job. I lost 1,500 hours due to what? Inefficiency. Or 3,000 is lost due to inefficiency. It is called as what? Yeah? Efficiency. Respond. Are you following or not? Instantly we just observed it, that's all. Now let us start doing the problem one by one. First variance is what? Material variance. Write down part 1. I should at least complete material and labor now. Okay, write down part 1. It will not take more than 4 minutes. Yeah, if possible variable also. Okay, write down step part 1. Here. Don't talk, don't disturb. Part 1. Material variances. Part 1, material variances. Underline that. Step 1. Material variances. Step 1. Tell me what is step 1? Computation table. Step 1, computation table. Look at the question. Tell me mix of material or single material? 3 columns or 4 columns? 3 columns. Open the 3 columns. Column 1, SQ into SP. Column 2, AQ into AP. Column 3, AQ into SP. AQ into SP. Can you proceed or not? Now, leave 2 line space, right? Working note. Calculation of SQ. Working note. Calculation of SQ. Bracket la expand it. What is SQ? Standard quantity for actual output. Working note, calculation of SQ, in bracket write standard quantity for actual output. Standard quantity for actual output. Bracket close. Tell me what are the 2 columns I'm going to write? Input, output. Always standards are calculated using the standard input output ratio. Input, output. All of you involve yourself. How many unit output? 1 unit output. Output right 1 unit. How many kg allowed? 3 kgs. So 1 unit output, input right what? 3 kgs. How many units have actually produced? Please tell me how many units? 25,000 units. The actual output is 25,000 units. What is the metal quantity allowed here? 75,000 kgs. SQ is 75,000 kgs. 75,000 kgs. Please come to the main statement. 75,000 kgs into what is the standard price here? 4.4. 75,000 kgs into 4.4. 75,000 kgs into 4.4. Okay. Now, next, second column, please take the calculator. What is AQ into AP? The cost of actual metal purchase and use is how much rupees here? 3,36,000. That is AQ into AP. The total of the single is how much? 3,36,000. In which I paid how much rupees to purchase it? 4.2. Please divide and tell me 3,36,000 divided by 4.2 gives you how many kgs? 80,000 kgs. Second column is 80,000 kgs into 4.2. Other words, I purchase and use 80,000 kgs at what price? 4.2. That only gave me 3,36,000 rupees. Respond yes or no. Third column. AQ into SP. What is AQ into SP? 80,000 into 4.4. 80,000 into 4.4. Column 1 total 75,000 into 4.4 gives you 3,30,000. 3,30,000. 80,000 into 4.2, 3,36,000. Once again, stop writing. Some are looking blank. They said 3,36,000 given. What they said? Cost of actual material purchase and use. Actual material purchase and use is what? AQ into AP. What is the number here? 3,36,000. You know, they said I purchased at how much price? 4.4. How many kgs purchased? Balancing 80,000 divided by only giving you 80,000. Yes or no? No. The third column is 3,52,000. 3,52,000. Step 2. Variance calculation. Step 2, variance calculation. Step 2, variance calculation. Center right material cost variance. Step 2, variance calculation in the center right material cost variance. 1 minus 2. Middle cost variance 1 minus 2. What is 1 minus 2? 6,000 adverse. 1 minus 2, 6,000 adverse. Branch it into 2. Branch it into 2. Material price variance. First branch material price variance. Second branch material usage variance. Material price variance. Material usage variance. 3 minus 2, 1 minus 3. 3 minus 2, 1 minus 3. What is 3 minus 2? How am I going to be? 16,000 favorable. 3 minus 2, 16,000 favorable. What is 1 minus 3? 22,000 adverse. 22,000 adverse. Now, I will not discuss this again. One full sum now. Let us see the logic. See, I have produced how many units? How many units? 25,000 units. For which I should have spent how much for material? 3,30,000. I spent how much? 3,36,000. Overspent material cost, underspent, overspent, 6,000 adverse. Yes or no? Why the material cost is adverse? Because usage may differ or the price may differ. I plan to purchase at how much rupees? 4.4. Ultimately, how much rupees I purchase? 4.2. 20 paise saving. So, how many kgs? 80,000 kg. It is 16,000 favorable. Yes or no? Now, I should have used how many kgs? 75,000. But I use how many kgs? 80,000. Over usage? 5,000. Into 4.4 gives me 22,000. Adverse usage variance. Respond yes or no? Now, I don't part to 2. Labor cost variances. Part to 2, labor cost variances. Part to 2, labor cost variances. Okay. Single labor, mix of labor. Single labor. How many columns here? 3 columns. Step 1, computation table. Step 1, computation table. First column is SH into SR. Second column AH into AR. Third column AH into SR. SH into SR, AH into AR, AH into SR. Now, all numbers are there. SH is there. The first step we did now. Now, please look at the first step you did and tell me what is SH. I want number, then you write what is SH? 12,500. What is AH? Okay, look at my finger. Yeah, what is AH? 14,000. Yes or no? Now, we have SH as well as what? AH. Can you perceive? Now, write down. SH into SR. Tell me what into what? 12,500 hours into, what standard rate per hour? 5 rupees. 12,500 hours into 5 rupees. What are the actual hours? 14,000 hours into what the actual rate paid? 5.4. 14,000 hours into 5.4. What the actual hours? 14,000 hours in the standard rate is 5. 62,500. First column is 62,500. Second column is 75,600. Second column is 75,600. Third column is 70,000. Third column 70,000. Center right. Step number 2. Step number 2 is what? Variance calculation. Step 2, variance calculation. Labor cost variance. Variance calculation. Labor cost variance 1 minus 2. Labor cost variance 1 minus 2. What is 1 minus 2? 13,400. 13,100 adverse. 13,100 adverse. Branch it into 2. Labor rate variance, labor efficiency variance. Labor rate variance, labor efficiency variance. 3 minus 2, 1 minus 3. 3 minus 2, 1 minus 3. What is 3 minus 2 rate variance? 5,600 adverse. 5,600 adverse. 1 minus 3 is how much? 7,500 adverse. 5,600 adverse, 7,500 adverse. Now tell me, I have produced how many units? How many units here? 25,000 units. For which how much is the labor cost allowed? 62,500. What is spent? 75, 600. Overspent, underspent, overspent. How much rupees? 13,100. Why labor cost increased? Because I planned to pay 5 per hour, but I paid 5.4 per hour. 0.4 rupees per hour extra. For how many hours? 14,000. 5,000 rupees is what? Adverse rate variance. I should have taken 12,500. I took 14,000. 1,500 hours is extra due to inefficiency. Due to 7,500 rupees is what? Efficiency variance adverse or the labor variance calculation. Yes or no? Another 5 minutes left. Yeah. Okay. Now, next class be here on time. You have to continue this particular sum. Okay.